जो ग्रोथ स्टेज कंपनीज होती है ना, दे फील कि वी हैव एवरीथिंग रेडी. हमें तो बस एक बैंकर की कमी थी, बस बैंकर आएगा ऑन बोर्ड, हम लॉन्च कर लेंगे, कल इन्वेस्टर हमें पैसा दे देगा. See, investment banking at the heart of it is storytelling. If you're a sell-side investment banker, you have to be an excellent storyteller.
Then I of course worked my ass off in the internship. I would like work from 10 a.m. to 5 a.m. sleep in the office. I had a brush and paste like at my desk. I had change of clothes also. I was like, I'm gonna do everything here.
Yoga bar got bought over by ITC.
Right.
So I'm sure linking up with a strategic over there will help grow their business drastically, because ITC is on every single kirana store that you can find.
Once you can, but I think the second time you cannot afford to make the mistake.
Otherwise, you'll get fired.
I mean, it's not about getting
Not fired, yeah.
I'm just
It's not about getting.
Hi everyone, welcome to Conversation with Kushal once again. If you are an aspiring investment banker, this is going to be the perfect episode for all of you, as we have called 3 bankers from 3 different companies. So we have Manthan, Darren and Nilesh from 3 different investment banks. So let's hear it out from them itself. Thank you so much guys for accepting and coming on the show. It's an absolute honor to host you all.
Thank you.
Thank you,
Pleasure to be
Kushal,
here.
for having
Thank you.
us.
Perfect. So how about we start off with a quick round of introduction? Maybe we can go alphabetically. So Darren, you can go first.
Sure. Hi guys, so I work at Mosaic Capital. I've been working here for 2 years. My name is Daran Contractor. I'm an associate at Mosaic Capital. We are a boutique investment bank, majorly focused on 2 things, which is M&A and fundraising. So apart from that, by educational qualification, I'm studying towards the CFA. I'm giving level 3 soon. So that's it, yeah.
And what have you done in your undergrad?
So I've done my BMS from Mumbai University.
Okay, so you have done BMS and then you shifted to investment banking.
Yeah, so BMS, you can specialize in a certain field. So BMS in finance was the, yeah.
Got it. Perfect. This was a very resume-oriented introduction, I think. Tell us something which is not there in your resume, or something apart from this as well.
Nothing, yeah. I'm an avid reader. That's pretty much it. Like, I just like spend time working, reading and chilling. What else?
Got it. Perfect.
Yeah.
We can go next.
Sure.
Yeah,
Who's next?
I'll go.
Manthan,
I think, yeah. Hi everyone, my name is Manthan Rawat. By qualification, I'm a chartered accountant and currently working at Ambit Capital as an associate in the investment banking team. Specifically, I am part of the startups team, where we help Series B plus or growth stage startups in raising funds from the investors. Prior to this, I was part of KPMG. I was part of the M&A and PE tax practice, and I hail from Surat. That's how my journey began, from Surat to Mumbai. It's been a good journey, and I think I love the work that I do, because it's investment banking plus in the startup space. I think 2 best combinations that one can have.
So I think this is a common question to all of you. So one thing which is not there in your resume, you have to answer that question as well.
I think you know this partly, but a big fan of sports. So I think playing and watching a lot of sports, that's what I do in the limited time that my job allows. Yeah.
I think we'll touch base on the limited time part in the latter part of the conversation. Everyone wants to know the working hours, but yeah. Nilesh, over to you, please.
Sure. Hi everyone, I'm Nilesh Basuroy. I'm currently an assistant vice president at Nuvama Wealth Management Limited, which is formerly Edelweiss Securities Limited. I was born and raised in Delhi. I did my undergrad in economics from Sri Ram College of Commerce, Delhi University. After which I went on to do my master's in economics from the Delhi School of Economics, again University of Delhi. Then I moved to Nomura Investment Banking. That's where I started my career and have been with Edelweiss / Nuvama now for the last 5 years. I am an assistant vice president in the consumer and healthcare team. I cover deal making initiatives in those sectors.
So I think we have 3 diverse people from 3 diverse backgrounds. One is from BMS, one is from economics, masters in economics, and one is a chartered accountant. So this will be like a free-flowing conversation from 3 diverse perspectives, and I think all of you also cover different sectors. So it'll be good to talk about the sectors and the insights that you cover there as well. So let's begin with the first question. It's a very, very simple one. Everyone wants to know what exactly is the work of an investment banker. And then we can break it down into domestic, boutique, and bulge bracket. If we can just break it down, that'll be very helpful to start off with. So maybe Darren, if you can just start off and we can just go ahead with that.
Sure, yeah. So I work in a boutique investment bank. So as an investment banker working in a boutique, we're usually a small team.
So what exactly is a boutique investment bank?
A boutique investment bank is a bank that's focused on a small amount of functions. So in our case, we're focused on equity fundraisers in the early stage and M&A activities. So that's pretty much all we focus on. And within that, we're sector agnostic. So we don't focus on any sector because we're a small team. And we've worked across multiple sectors, and there are sectors that we like. We like healthcare, we like consumer. Warehousing also is a new thing that's come in. So we work in sectors we like. We get more attention from sectors we like, but that way there's no hard and fast rule with us as a boutique.
And how big is the team usually in a boutique bank?
It ranges. It ranges anywhere from like, two to three people to like a whole team of like 20 plus. Yeah. It doesn't matter. So that depends on how good the deal flow is, but and how you want to structure your team. Like we've opted to keep the team lean. That's just how it is.
Got it. Cool. And maybe if you can answer that, like what exactly a banker does and what exactly is the role of the banker.
Sure.
That'll be
Sure. So an investment banker basically helps different companies in their fundraising requirements. Now, fundraising can be of two types, whether you want to raise debt or you want to raise equity. So there are a few banks on the street like our bank, which is a full service investment bank. We offer debt raising products as well, along with the typical equity, M&A and private equity raised products. So in the debt raising, you can raise, you can refinance existing debt, you can raise new bonds and notes from the market. So the investment banker on the debt side will help you get the best deal out of that. And on the equity side, you have, again, two options. One, you want to raise money from the equity capital markets. Today, you're unlisted and you're a private enterprise and you want to list on the stock exchanges, NSE, BSE, wherever you want to list. An investment banker will help you do your initial public offering, the IPO. And if you're an already listed company, then there are follow-on fundraise requirements and activities like a QIP, a qualified institutional placement, or you have a pref allotment, or you have block deals where promoters of the businesses sell stake to raise money for themselves. And then on the private side, you have typical mergers and acquisitions. You want to merge with a company, you want to acquire another company, you yourself are looking to get sold a majority position. And then there's private equity fundraising. Again, that can be of multiple types. There is buyouts, there is growth funding, different series, early stage, all of those. So that also happens in the advisory side. Yeah.
Got it. So from what I understand, like a proper role of a banker is to act as a mediator in helping startups or maybe anyone raise capital, be it debt or equity, and then charge some percentage of commission as a part of success fee.
Absolutely. And not just startups, right? Any company at any life cycle. A banker is your most trusted advisor. The good bankers have gone on to actually advise large companies on how their course will change. Like people like Nimesh Kambani and on advised when the Ambani brothers were splitting. He had that level of stature and sort of, trust with that company's promoter. So bankers actually end up over a life cycle of deals and careers becoming real advisors to you in any kind of advice that you might need.
Got it. No, makes sense. I think that's helpful. So, Manthan, if you can break it down for the audience, the difference between domestic, boutique, and bulge bracket, and how are they categorized, that'll be helpful.
So a boutique, I think, as Darren mentioned, is any firm has a small setup and a very niche focus area, whether it be one product, it could be an equity product or a debt product, or focus on, let's say, startups, or focus on, let's say, only consumer. That's a boutique bank. Domestic and bulge bracket, it's more on a geographic classification. Domestic, as the word says, are mostly Indian banks. Domestic banks, and bulge bracket are usually the global banks because they have that kind of history to them. They've been like JP Morgan's, Morgan Stanley's of the world, who have been in operations for 100 years, 120 years, even more. So they are called the bulge bracket. Domestic banks a couple of them might graduate to become a bulge bracket in a few years to come, maybe a decade or so, once they mature enough. But usually in India, bulge brackets are the global banks, JP Morgan, Morgan Stanley, and domestic banks would be Edelweiss, Nuvama, Ambit, Avendus, KwK, Axis, ICICI. These are all domestic banks.
So is there a criteria, as you mentioned, that, okay, some banks can go from domestic to bulge bracket. So what exactly is the criteria for defining a bank?
I don't know if there's a technical criteria. It's more like
it's nomenclature.
Industrial.
Industry.
There's
no hard and fast.
Yeah, there's actually nomenclature in the sense like Big Four has come to define. Then you have MBBs and everything. So similarly, a bulge bracket like Ivy Leagues. These are coined terms which are sort of entrenched in that nature. but a lot of other banks are actually dominating in different spheres, like the Indian IPO market, like taking companies to list on the stock exchanges is heavily dominated by domestic banks, the kind of deal shares they do. So bulge brackets tend to do those bulge deals, if you may call it, those billion-dollar transactions, because their fee thresholds and their benchmarks to take a deal is something which is much higher. Whereas the domestic banks would look at mid-market transactions ranging anywhere from 30-40 million to 300-400 million. That's where the majority volume of deals is in the Indian market, if you look at it today.
Got it. And what would that number be for the bulge bracket?
That number for a bulge bracket actually varies. So over time, say a Goldman JPM today will not touch a fundraise below 800-700 million dollars, that too depending on the pedigree of the company. Otherwise, usually their sweet spot will be anywhere from 500 to 2 billion, 4 billion and upwards of.
I think it's slightly changing. That was usually the case before, but I think these days you'll see bulge bracket banks also taking mandates as low as $100 million. I think ideally the fee, I think it's more than the fundraise amount. True. It's more than how much fees they generate from that, right?
Yeah.
So any bulge bracket bank usually targets a 30 crore kind of a fee. I think maybe 25-30 crore minimum.
Yeah.
Now you extrapolate that, what's the kind of the deal, size of the deal that can be basis that fee. So they would want at least that fee for their entire structure to make sense.
Yeah.
And below that, then you'll see a lot of domestic banks will work for, will take smaller deals which will give them a fee of less than, let's say, 20-30 crores also.
And just to add on that, there's another reason why they're taking those smaller deals also, is that now you see, like with the likes of the vendors, there are follow-on rounds. You get to be on multiple rounds, right? So even if I'm raising a smaller round for you today, I'm going to advise you on multiple rounds and I'm going to make my top dollar over a period of time. So that makes it lucrative. That's why I'll back a horse which I know is going to, give me those kind of returns. And if I can raise 100 million for him today and then make him do a multi-billion-dollar IPO, then I'll be your banker of choice that way.
Right. Makes
Absolutely. And for that reason, exactly, which is why we sometimes opt to work with like pre-series A startups as well, because you can stay with them for the longer run.
Yeah.
Right.
In the end, it's all relationship business, right?
Yeah.
If you talk to the legendary investment bankers of the country, like you talk to Mr. Kampani, Mr. Wadhwa and all, they have built relationships over decades, right? And that's the same reason why you see a lot of bulge bracket banks today trying to take smaller mandates. You build a relationship to them. You might not make the desired fees that you can, but in subsequent rounds, in subsequent IPOs, follow-ons, exits, and all, you ultimately make your fees.
And that's not only on the sell side, like on the buy side also, you can see the venture capital funds doing the exact same thing, right? Like people like Sequoia coming to the earlier stage with Surge, with others as well. So it's happening all around. Everyone wants to tackle companies at an early stage, work with them at an early stage and grow together.
Can you just quickly explain everyone the difference between buy side and a sell side?
Yeah, so from our perspective in investment banking, sell side is a product that we take to market. So for example, if a startup wants to raise money, we will take the startup to market and find buyers as in that can buy into them from our connections. Whereas on the buy side, in this perspective, is say a public company wants to make acquisitions of smaller subsidiaries in a new sector. So
Can you give an example, like just naming companies, any random example as such?
I mean,
for example, I think Byju's acquired Akash, right?
Yeah.
So a banker of Akash would be called a sell-side banker.
Okay.
A banker for Byju's would be called a buy-side banker.
Absolutely.
Because Byju's was an acquirer in that case.
Yeah.
Not necessarily acquisition. Let's say Byju's would not have acquired, just invested 10%, let's say, in Akash. Even in that case, a banker of Byju's would be called a buy-side. And a banker for Akash is a sell-side banker.
Absolutely.
Got it. So this is more like, let's say, a broking kind of a business. Like if I'm just comparing this with real estate, if there's a buyer of a flat and a seller of a flat, there will be two brokers who will help them find the flat and transaction, the middle ground.
Finding the middle ground.
It's basically similar to what we are seeing here also. Like there'll be two bankers.
Don't
I
ever call
disagree.
bankers brokers,
Yeah.
But
Why?
Huge difference because a broker is selling an already ready asset without doing much to it, right? A banker comes into a company's life cycle at a time where they get them internally ready. We get our hands dirty sitting with the company's management, spend a lot of time getting them ready, getting them to look inwards on what they're doing wrong, what financial processes are not in place, what are the weaknesses that they have currently. A lot of companies get a lot of expertise and advice from us in running their businesses better. So by the end of it, we not only raise capital for them, we leave them better than they were when we entered. So
Got it.
as a value additive component, we are advisors to them, where our services are much beyond just getting that capital in. So it's not a buy and sell transaction.
It's much more than
Makes
that.
sense.
Very truly, I think, said by Nilesh,
Absolutely.
because I've seen this in our, because ours is a startups focused team, right?
Yeah.
And startups, even they take a lot more time to mature in terms of process and all. And we have got this feedback after the end of the fundraise from the founders themselves. And even if the fundraise has not gone through, after the end of the process of, let's say, 5-6 months, they say, we have understood so much about our own business, the way or the lens that we put has improved or matured in a way that wasn't there maybe 6 months ago. Because you guys came in, you spent so much time with us in terms of presenting our story. So that's, I think, a key value addition that as a banker that you do to all your clients or companies.
So how do you guys decide which particular company to work with? And of course, there are a lot of companies who will approach you. So how do you take that decision?
So it's a combination of things, right? So as bankers, we are also, say for example, I cover consumer and healthcare. So it is part of my job to have an entire eye on the landscape, depending on the kind of companies that we look at, right? So everyone has defined scopes of the kind of transactions they do, which ultimately translates into what bucket of revenue threshold or profitability threshold companies you want to look at, right? So our job is to comprehensively map that landscape, to keep an eye out on which are the companies which are it's actually a skill to have, to pick up unnoticed companies, to go start covering them, to know that I see potential in them and work with them to get them ready to do that fundraising round. Second is, of course, you get inbounds. A lot of times on IPOs where there are already scaled assets, they have that strategy that next step is to go to public markets. So you get invited for what they call beauty parades. A beauty parade, what it means is that they invite multiple banks to come in and pitch. Right, so a lot of the banks, they get ready to come and pitch to win that mandate, and then you get appointed. So it'll be one day in one 5-star hotel. They'll book conference rooms, and you'll see bankers scampering around in the lobby, everyone coming in their sharp suits and all of that happening. Okay. So that's like a typical invitation to pitch sort of a thing.
So the power of choosing the banker is on the company, because they have the
shareholders. So it can also be a private equity who's sitting on the cap table. They can have the decision, but yeah, shareholders of the company or the company itself will always have the right to choose the guys they want to go ahead with. IPO deals, public market deals are mostly multi-bank deals. You take a syndicate, it's called a syndicate, a banking syndicate of 3 to 5 banks, or even larger syndicates if it's a very large fundraise. So like when Paytm came, they had about 8, 9, 10 banks on their BRLM list.
10 investment banks?
10 investment banks on their list. So they nearly had everyone on the street, because if you're raising that much amount of capital, you need to, because everyone comes in with their own strengths, right? We would come with domestic, H&I, retail sort of strengths. Global banks will come with US, FII, investor strengths. So you want to have that.
But then the role of these 10 investment banks would be like similar only, right? In the sense that you mentioned that some investment banks will tell the company in terms of what it is doing wrong, etc. But in this case, I assume that all the 10 banks will be given a mandate कि okay, itna capital raise करवाना है.
So yeah, right? So how it will work is that in every IPO transaction, there is somebody called a left lead BRLM. A left lead, what that means is that person is responsible for the entire DRHP, the prospectus.
What is BRLM?
BRM is book running lead manager. That's a term that you coin for the bankers advising on IPOs.
Okay.
And as part of the IPO process, there are a lot of regulatory requirements that need to be met. And one big requirement is to file a prospectus, what we call a draft red herring prospectus. You keep hearing in the media, DRHP has been filed, and then all of that. So the left lead is responsible to handhold the entire company to make that document. It's a comprehensive document where a lot of lawyers come in, a lot of auditors come in. It's a huge exercise to get that going. Left lead holds the pen on it, but the other banks are contributing to it. They are supposed to contribute, give comments, work towards drafting of the book, how you will position the business, what is the industry outlook like. You appoint different industry advisors, legal advisors. So it's a huge process. And similarly, when you go out to the market to market the issue, there are defined roles. Who's going to lead international marketing? Who will lead domestic marketing? So that you make sure there's some method to the madness. But at the same time, you need heavy hitter guys, because you're raising that much quantum of capital that you need more people to go power through and get you that money in. So you're just diversifying your bets in that way, right? Like as an investor, you invest in a bucket of stocks, so you're picking a bucket of bankers.
Right.
But this answer fully changes at the early stage. At the early stage, there's a screening process on our side. There are multiple young startups that are coming to raise money or just have some sort of deal activity. And we'll screen them, we'll assess them, and that process could go on for a decent amount of time, a couple of weeks also. They'll share data with us, of course, the NDA after the NDA. But in like Nilesh said, there's also cases where we'll have to go and there's like a somewhat of a bidding process and we'll have to present and give our part. But yeah, while holistically it's the same, it's really different here because we could be introduced by even venture capital funds. Like the funds could be like, okay, I've been my exit is, like I want an exit soon. Why don't you help us? So it really depends on which shareholder makes the introduction.
Right.
I think one important part of this also screening process is because as bankers, your fees depend on the success of the
Yeah.
deal, right? So you have to make sure that deal goes through. And to make sure that deal goes through, you must also be very much aware of what's the flavor in the market, right?
Yeah,
Of how your investors are thinking. What's the trends? What are the key trends in the market? What are the emerging trends in the market? Maybe if you pick up a mandate today, and maybe that sort of a business goes out of fashion, let's say in the process only, times it happens that you started the process 2 months into the process, suddenly things have changed, something has changed in the market, or maybe it was already on a declining trend and maybe you took up the mandate, but by the time you go launch in the market and the deal isn't really happening. So a very key important I think a very important role of any investment banker is also to keep talking to investors or keep talking to the market.
Very true.
Keep talking to what's
Very true.
happening, how's the consumer trends changing. If it's a B2B business, what are the different landscapes, interest rates, how will it impact the availability of capital in the market. I think that's very important because that's part of the investment banking process of how to pick the good mandates, right? And mostly I think this, obviously the junior team helps, but usually you'll see the senior level or the
Yeah.
senior members because they're more connected to the industry, they're more connected to the investors and the companies and the competitors in a sense. So they usually take these decisions whether to take up this mandate or not.
Got it.
And just to add to that, the importance of covering financial sponsors. So we call private equity and we see the entire landscape as financial sponsors. So we have a lot of the investment banks have dedicated teams to only cover investors.
Yeah.
So like we have a financial sponsors group team, which is composed of very senior people, like 3-4 senior people with couple of juniors who are constantly there. One job is to go regularly and ideate with all funds. So we cover every investor at every stage. We have a relationship. So that what that does is that, because you have to understand that in investment banking business, the maximum business you get is from financial sponsors. A normal company will come do an IPO and then may not do anything for many years. But a fund is holding multiple companies in its portfolio.
Yeah.
So they'll exit that, right? They'll have multiple things. So you need to also FaceTime with funds quite a bit to not only understand how to place your deals, but also to win deals, because they are a hugest pool of winning new business.
Right, makes sense. Is it always a success based fee kind of a model? What if the deal
Mostly
doesn't go
it is.
through?
But I think
There is, yeah.
a lot of bulge bracket banks, they also put a minimum threshold criteria and all.
So I'll give you a breakdown on how the fees work, right? So like we were talking about sell side and buy side a bit earlier, just to give you more color on that, sell side is the more lucrative part, right? To be on sell side is higher probability of you getting a fee, because buy side you have multiple buyers vying for that one single asset. You may or may not be successful in buying that asset, but a sell side banker will make fee if the transaction goes through. So in India, you'll see predominantly sell side transactions, but in the Western countries, buy side is also a very big component. So, and the fee structures also vary for both these type of things. Because buy side is less on the probability of success of the deal, they charge retainers. So what you call like lawyers charge retainers. So it's a similar concept that if I have been appointed on the buy side, I'll be paid a monthly retainer to help you ideate, find targets, talk to targets, do discussions, analysis, because I'm still giving you my time. So I'm billing you in that sense and getting that retainer. And there also be a success component if you go ahead, and which will be a percentage of the deal value that will happen. On the sell side, what happens is predominantly it is a success fee of the percentage, but a lot of times you also have things like sign-on fees, which is like a token amount, which can be offsettable or adjustable against the final fee. Then you have a milestone fee, say a non-binding offer, you're running a deal, a non-binding offer or a term sheet has come in.
What is a non-binding offer in a term sheet?
So basically, in the life cycle of a transaction, when you launch the deal and you market it in the first round to the investors, then the first preliminary sign of interest that is expressed in a particular deal is expressed through either it's called a term sheet or a non-binding offer, which just lays out basic terms of the deal, the kind of valuation they're willing to offer, and puts a formal sort of interest on the table. Post which the deal goes into due diligence and all that, deep diving. Post which a binding offer comes. After that, the binding offer is accepted. Then you get into the definitive documentations, your share purchase agreement and all of those. So then that's how the transaction eventually concludes. Yeah.
Got it.
But also on the buy side, we often have a fixed fee structure also, because we're not incentivized to then like try to buy the company opposite at a higher price, right? We're trying to get the lowest price possible for our client. So if with a success fee, with a variable success fee, that would kind of incentivize us to get a higher price, which doesn't make sense. So because of that, very often we tend to have a fixed price for them,
Got it.
apart from the retainer.
Got it. And
Yeah.
what exactly would be the range of these retainers? Although I know it varies a lot from banks to banks, but what would that number be?
So you can't put a range to it predominantly because of any transaction has very different dynamics to it, right? A very large conglomerate might be happy to pay you a heavy retainer because it doesn't really cost them anything. But a smaller company will want to minimize the retainer and maximize your success fee, sort of a thing, right? So there are no accepted threshold as such, but in terms of say retainer is more an agreed upon absolute amount, whereas success fee is an amount in the range. Like say on very large deals, you'll see people charging 0.1, 0.2% also because the deal is multi-billion dollars. So you will end up making very good fees anyway. But whereas he was talking about earlier, the smaller deals, for very small deals where companies, so you have to understand that very small companies are tough to raise money for, right? Because they haven't proved themselves in the market yet. So the banker's job becomes that much more difficult. So they also want to charge a premium for that kind of service. So it can go up to 5, 7, 8% also of the deal size because the smaller deal size. And I'm going to stretch myself doing that deal for you. So I also want to make my bucks, right? So it actually varies quite a bit.
Yeah. So if you go on the lower side, you can see a floor happening. Like we'll charge a 50 lakhs minimum at least. If you go on the higher, very
50
large.
lakhs over what period of time?
No, it's a deal per deal basis.
Okay.
So deal
And
close,
how
yeah,
long usually? Like it'll be 6 months or 12 months?
depending on what's the type of transaction.
Okay.
Some transactions or some startups, when the deal phase was very high, were even closing in 2 months, 3 months.
Okay.
Otherwise, the deal can take as long as 6 months, 9 months, even 12 months. There's no
So this
time
50
limit.
lakhs you're seeing over the entire deal. It's like
Yeah.
throughout the
Upon
deal.
signing, mostly it's
Got it.
upon when the money hits the bank of the client. That's when you get
No, I
paid.
think he's saying this is a minimum threshold of the success fee.
Of the success.
Yeah,
Which
for
is
success
again-
fee, I'm saying.
which is
On the
again
lower
different,
end, but let's say when you go on the higher end towards very large, let's say HDFC Bank and HDFC merger, I'm sure people wouldn't have gotten paid over there as a percentage. They would have gotten paid a fixed amount. Obviously, running into multiple.
How many
crores,
bankers were there in that deal?
17 or 18, I think.
18 bankers.
Yeah, on record.
My God. And all eight, like, but I read that only 2 bankers were like the main one. I think.
See, in
those
all
also
cases,
meant-
you will have usually 2 or 3. Let's say in IPO, you have a BRLM, right, who does bulk of the heavy lifting. Whereas in similar case in this case also, I think in HDFC also there were 2, 3 who did the bulk of the work. But on record, there were like 17, 18. I think so, if I'm wrong. Or maybe.
No, that's not. So basically, they're originally to stitch you're talking about the merger, right?
Yeah, merger.
Yeah, so that would have happened like one guy would have been appointed on the buy side, one guy on the sell side. But after that, it triggered a mandatory open offer. A lot of other stuff happened. So then you need to appoint, and then they raised money also after that. So for that, you'll have these guys.
What will be buy
extra.
side, sell side here, by the way, in this merger? HDFC and HDFC Bank. Like, who will be a buy side
So,
banker? Who will be a sell side banker?
difficult
It's
to, I think,
difficult to-
classify.
Yeah,
who was
here
buy
it's
side,
difficult
who
to
was
classify. Here it's difficult to classify. Here it's more like that the company had agreed upon a strategy and then they appointed guys on each side to take care of, because you have to understand that a lot of regulation, paperwork, a lot of things need to happen for a banking merger to go through. Because
And technically,
banks-
this was less of a merger acquisition, more of a corporate restructuring, I would say.
Yeah.
Because,
That's true.
Because it's
That's
the same group, right? Ultimately, SDFC held SDFC Bank. It was just like a restructuring of just to value unlocking of.
So
from
yeah,
an entire
what was
group
the main
perspective.
reason of entire restructuring?
Not quite sure.
So I think like I'm also not entirely qualified to fully opine on this, but what ends up happening if you look at the trends is that parent companies which are holding say percentage in particular stock, like HDFC Limited held XY% in HDFC Bank, in HDFC Life. What ends up happening is that even the market realizes that this is just a holding company, it's a parent, the business doesn't sit there. So that stock starts getting a holding discount, like a parent company discount.
Holdco discount, I think.
Holdco discount, right? And also because the entity has become so large, right? You want to also, simplify life for yourself. You want to collapse structures. Over the journey of companies, a lot of times, a lot of entities happen, multiple entities open up, which once you become very large or one particular entity becomes very large, the other entities don't have enough business left in them. So you also want to cascade and sort of bring down the structure to simplify processes internally for yourself too. So it's more like a simplification strategy. Plus they saw that this will be more efficient because all of the businesses are anyway synergistic. They can run together in that one particular entity, which is anyway getting fully valued in the market.
Yeah. I think one of the major advantages that happened post this merger, because HDFC held an NBFC license and HDFC Bank had a banking license, right? Post the merger, a lot of products which were not allowed to one of the entities, now because of being a single entity, it's very easy to cross-sell products. So, because any banking or financial institution, the core thesis like you acquire a customer and you can sell
Cross-sell.
as many products as to that particular customer.
Yeah.
The cost of acquisition is very high. But if you keep servicing that client, you will earn a higher profits.
Yeah, the lifetime value will
Lifetime
become
LTV
higher.
to CAC ratio
Yeah.
is
Yeah.
extremely high.
What is LTV to CAC? If you can
Exactly.
explain.
Lifetime value to customer acquisition cost.
Yeah, if you can explain that to the
Yeah,
audience.
I think more in a startup terms these days, LTV to CAC is used. LTV is the lifetime value. Let's say Zomato, right? Zomato acquires a customer, let's say in month one, let's say January 23, right? They spent 1,000 rupees to acquire that customer, right? Over the course of, let's say, next 24 months, that customer spends around, let's say, 10,000 rupees on Zomato. Zomato earns, let's say, a contribution margin of, let's say, 20%, for example, which is 2,000 rupees. So they spend 1,000 rupees to acquire a 2,000 rupees of worth of value from a customer, which is like LTV to CAC ratio of 2:1.
And what is the average good LTV to CAC ratio in the industry?
I think that's very difficult. So originally LTV to CAC originated, I think, more from a SaaS offering, because there the CAC is usually a one-time thing.
What
because
is SaaS offering?
SaaS is more like any technology or any software service, right? Let's say, for example, Adobe, let's say, sells you a Photoshop subscription, right? Or Zoom sells you a Zoom subscription, right? So that becomes like a SaaS offering for you, right? Because once you, most likely, once you have bought that subscription, you will keep renewing over a period of, let's say, 1 year, 2 year, 3 year, 4 year, right? So usually from that industry, this word came in, but now it's used fluidly across all the industries. So that's the LTV to CAC. There's no sacrosanct number that this industry will have this, because this varies from industry to industry. But I think usually 4 to 5 is a good LTV CAC to. I think that's what in the startup universe people look at.
Got it. Yeah, I think 4 to 5 is what I had also heard of. Let's get down to the main roles of investment bankers now. I think we've spoken a lot about mandates and success fee and the fee structure here. What I want to know is how does a typical day in your life look like? So maybe we can start with one of you. Nilesh, maybe you can start off, and then I would want to know exactly like what do you start off, how do you start your day, how do you end your day, and what are the tasks you do over the course of the entire day?
Sure. So I think I want to on a transition that way now. Today I'm an assistant vice president, so I have juniors in my team who are, so I'm beyond that, heavy lifting grunt work sort of days, which I think can be touched upon. But my day predominantly, is looking like, because I'm transitioning now towards generating business for the firm, because that is the key task, right? To win business, to go out, cover companies, win business. So my focus is sort of, I still spend a lot of time guiding and working with my juniors. So say, for example, anywhere my day would start, I'm in office by 9:30 a.m. I would, the first obviously order of the day is to check your emails, see what's happening, existing transactions, what needs immediate attention. I tend to prioritize my day. I have a OneNote app on my laptop where I would put my tasks for the day, and I know how my day is going to look like and what I need to get done today in terms of deliverables. Then I would pick up the threads with my juniors on various things where they are. If something needs to be reviewed that came in last night, I need to have a look at it. I would take a look at that. Anything that I need to extend the analysis on, give them inputs on, or work and extend analysis on anything, I would read up on that, spend some time and give them that. And also if there's something that requires multiple hands on deck, I would also get back into, say, doing the PPTs and all of that would happen. Then a lot of my time also goes into covering and calling a lot of my clients, right? So some clients are being transitioned to me from my seniors, that now you start covering them. Some I have originated on my own through my personal connections, or through even cold email and reach outs. I start meeting them. It's very important to keep following up and being in touch with them and having a pulse on what they're doing. So I spend a lot of my time also doing my calls for the day. Then there might be calls where seniors want, or meetings where seniors want me to accompany them to cover situations, meet new companies, all of that. And so predominantly I spend a lot of time out of office, going, whether it's within Bombay, there are multiple meetings, or I'm traveling to Bangalore, or I'm traveling to Delhi a lot, Gujarat, Ahmedabad, and all of those places. So yeah, it's a mixed bag of traveling a lot. But yeah, my focus now is moving towards more reading very deeply about the sector, covering companies, meeting people, and trying to generate business as I go.
So what is this travel mostly for? Like, what do you travel for? Is it for sourcing clients or?
Absolutely, right? It's a combination again. I might have a client, like currently we're working on a fundraise for a company based out of Delhi. So my client is in Delhi. So I'm traveling a lot to be with my client and, making them meet investors, management meetings are happening, or I am handholding the company in that stage where we're building collaterals, right? Where we're ready, prepping the company to launch the deal. So I'll spend a lot of my time. This is existing mandate work where I'm spending time in another city. But also at the same time, the companies I have mapped out or I know are on my radar can be located anywhere in India. I might have to travel to Coimbatore. I might have to travel to Surat. It might be a lot of big, large businesses are so undiscovered in tier 2, 3 towns.
Yeah, of
So
course.
you want to also reach there first.
So it's a fancy job from what I understand, right? Like traveling here and there, and
It can get a
bankers
bit-
have a lucrative life.
Try traveling 3 times. Obviously, you
Yeah,
do.
try doing that.
You do it.
I've been on
You
the
do
road.
much. I'm
Yeah.
sure you do much more than investment bankers. But yeah,
No.
try
Yeah.
traveling 3 times or 2 times a week. You will see.
It
the
gets to you.
fatigue.
It's exciting to begin with, but it gets to you. Like I've been on the road this entire last week. We're launching quite a few deals. We closed a few deals. So I was on the road for a lot of those things. So it gets to you, but I think you adapt to it. I won't say it's like the very lucrative part of it. It gets hectic.
Yeah, it's definitely not the best part. It's exhausting for sure. Like, you think it's great for the first month or two, but once you do it for a long time, that's when it starts to have this thing on you.
Yeah.
At the same point of time, like my day, even though he's at an AVP level at a boutique, because the structures are not so set. Because the firm is a lot smaller, there's a lot of overlap between what Nilesh does and I do, even though I'm at an associate level. It's because we don't have that sort of hierarchical thing that would be there in a larger bank, and because of that, I tend to speak to clients, leads, etc. myself. Like Nilesh said, I tend to try my level best to bring in leads onto our to sign up with them. And of course, there's always trying to provide some value add. If you provide that value add, people are going to be happy with you. Even from a lead side, your potential client would be happy with you, and there's a more likelihood of signing up. So that's the value add that when you said earlier, right? Like that, how is it different from a broking business? Because we help them with that value add before even officially signing up with them. That's when they look at us as advisors, like he said.
Absolutely.
Right.
So yeah, a lot of my day also goes in a very similar fashion. We also, because at an associate level, you have to create your collaterals, which is your information memorandum, your financial model. A lot of time actually goes in getting data, because companies don't have, especially at an early stage, don't have such structured data. So you have to help them structure that data, help them create that MIS if they've not created it so far, and then roll it out. Eventually,
Got it.
you go to market. Yeah,
Like the most non-glamorous part of an investment banker is to coordinate.
absolutely.
And the amount of coordination that goes into stitching together client meetings, investor meetings, or even internally. So in a lot of cases, we have seen that client or founders reach out to us कि बस तुम काम करा लो हमारी टीम से. So because you're an external force,
Yeah,
right,
yeah.
on the company, the founders, they believe that because you'll tell their team to work on particular aspect, they'll take it more seriously than him or her saying it directly. Because fundraising is not the routine job of any let's say finance function of any company, right? Because that's not fall in their daily or the usual KRA, right?
Yeah.
So because it's more like a one-time thing or not a very non-occasional thing, right?
Yeah.
And hence they need those advisors, the force of the advisors to get that work done. On that note, I think Nilesh covered the more on a mid-level general managerial role. I think I would, because I started off as an analyst at Ambit and then I became an associate. I'm still at a junior, let's say, in the entire scheme of things, right? I think a typical role, I think there's no typical day for us, right? It's more, I would divide it more like a deal phase of the year and the non-deal phase of the year, right?
True.
Or it could be month, anything, right? So when you're working on a deal, right? Because at the junior level, it's mostly, and I think most people who get into investment banking would start off at this position, right? Where you are actually part of the execution part of the team, right? So usually when there's a deal phase, you are making collaterals, as Darren was saying, right? Information memorandum of business plans, your data books, your FAQs for investors, and right. So your time goes into building those, which very crucial part is to get the data from the client, which usually takes the most of the time waiting for the data, right? And when the data comes, the client wants it next day. That's the, I think,
Yeah, that's the reality.
that's the reality.
Truer words
Client
haven't
will
been
wait 10
spoken.
days to give data, but the moment they give
hits
data,
him.
they'll call up, okay, when can we get the deliverable?
Please share it promptly with us.
As soon as possible. So investment banking, everything is due yesterday basis.
Absolutely.
That's the, I think, that's the general rule. Everything is due yesterday basis. So yeah, whenever there's a deal phase, you're making these collaterals. When there's not a deal phase, right, you're not mapped to a particular deal, right, it's a lot of BD work. Let's say Nilesh goes out, meets a client, right, or is about to meet a client, right.
Yeah.
What exactly would you present to the client, right, or what it's the background of the client, what's the background of the industry. Obviously he's reading, right, but maybe the junior team will give him a ready set of document or ready set of reading materials, right. Maybe if he's on the flight, let's say, or maybe during the flight he'll read this, right. So putting those things together, right, that's one part of the non-deal process, right. Second, there's a pitching that happens, right, when a lot of banks are pitching to the client. That's a very time crunch situation. Usually I've seen pitching happen. Let's say today you tell there's a pitch next week, let's say. So you get a very small window of 3 days, 5 days, 7 days to prepare a pitch, right. In that,
That's a good window, next week.
Next week is a very good window,
You have
yeah.
overnight also, when
Yeah.
everyone's hustling through like
yeah,
inside
I
the
mean,
office.
next week is a very good. I agree. That's a very good window.
That's actually comfortable.
Because see, that 1 week you have to understand that industry. Obviously, you know something about it, but to be able to pitch, you have to deep dive into that industry, sub-segment, about the competition, about the company itself.
So
And company will not give data.
You're pitching this to whom?
The client, company.
All the clients.
Yeah, company.
Yeah.
Let's say Zomato Swiggy. You're pitching to Zomato. Let's say 10 banks are coming to Zomato to pitch. Let's say
Correct.
next week. So you know about the food ordering industry, but you need to particularly know about the sub-segment that they are in.
How
They
will
are
Zomato decide which bank to work with? Is it just because of the fees or?
No. This is not an
Multiple
industry of
factors.
purely fees. I think it's a lot about what's your credentials. Let's say first thing that would look is what all work that you have done before. Have you worked in this space? If not space, the broader space. If not the broader space in this industry, right? Then they'll see what kind of deals that you've closed, what are the closure rates. That's one. Second, they'll look how much do you understand about this industry and about us. Third, I think very importantly, how will you position us in the market? Because see, investment banking at the heart of it is storytelling. If you're a sell-side investment banker, you have to be an excellent storyteller. So how will you position this, right? And that's where 1-2 months of collateral preparation. A lot of clients believe that we are already ready for fundraise. Okay, आज हम banker appoint कर लेंगे, कल इनको data दे देंगे और परसों हम launch कर देंगे process. Never happens.
Never
happens. And I think as bankers we have to give them those timelines कि हम 3 हफ्ते में तैयार कर लेंगे, पर नहीं होता है. I don't know about very mature companies. I'm sure उनके भी नहीं होता होगा. पर जो growth stage companies होती है ना, they feel कि we have everything ready. हमें तो बस एक बैंकर की कमी थी, बस बैंकर आएगा ऑन बोर्ड, हम लॉन्च कर लेंगे, कल इन्वेस्टर में पैसा दे देगा.
और फिर उनकी जब एक्सेल फाइल आती है आप खोलते हो ना, तब आपको लगता है
Then you realize
कि भाई ये तो हो गया.
lot of companies don't know what MIS is. Or if they know MIS, they have
They have their own version of MIS, which is
Yes.
not what MIS
Which is
is.
not
Correct.
Which is not what it is.
So
they'll only have their MIS looks like a financial statement, revenue, 5 line items, and PPT.
and their financial models are punched in hard-coded numbers.
Oh my
Yeah.
So
God.
that's like the cardinal sin, right? You
No
can't
no
do that.
linking. There's no concept of linking Excel files, different Excel
Yeah.
tabs.
So
That entire process of 1 or 2 months, apart from data, it's also about stitching a very good story together,
Absolutely.
right? Because see, unless you are a player which is getting into a very new industry, no one existed ever before in there, or there are no competition, so you can build whatever story that the founder says, right? But if you are in an existing industry, right, and there are, let's say, even 2 competitors, let's say, for example, how will you position yourself as a better investment option to the investors, right? Because investors have 3 options to invest in, right? They have all 3 would be in different phases, different risk profiles, different return ratios. So that 1 or 2 months goes into that story of building, right? Again, execution team usually takes part of preparing those collaterals, because IM gets prepared in the way where it syncs with whatever the founder is speaking. I think very important that whatever founder is speaking is backed by your collaterals. So a lot of time founders give a different story perception. IM will give a different story perception, and your model is built in a very different manner.
Yeah.
So if all the 3 do not sync together, this entire process does not make a lot of sense. So this is usually the part of the deal making process. I was on a pitch part, right? So pitch is when you that's a very short period where you have to understand and pitch to a client. Another part of non-deal phase is where you're preparing sector notes. So a lot of I think almost all banking firms have their own sector coverage
Newsletters,
notes,
sector
newsletters, sector coverage notes, whatever. For example, I cover, let's say, agri-tech at Ambit. So we have a agri-tech note, right? So you keep reading about what's happening in the agri-tech sector, what are the new trends, what are the new fundraisers that are happening. So you keep updating your sector notes, your coverage lists, and then that's part of the non-deal phase. So I usually divide work at an investment banking firm for an execution team, not for a senior team, but for an execution team as deal phase and a non-deal phase.
Right. And in 1 year, how many months would be a deal phase? How
Oh,
many
there's
months
nothing.
would be a
You
non-deal phase?
You can't, impossible to define, I think.
You can't define it, right? Because see, there are some deals, as you were saying, in a very good environment, in a momentum sort of a phase, it happens in 3 months, 6 months, right? Some deals can take 2 years. Like I was working on the Mumbai airport transaction where we sold Mumbai airport to the Adani group. That deal took 2.5 years to close, right? You can't predict that kind of timeline. That's the thing on the advisory side. IPO side, the public market side, there's still you know that there is a particular process. It's like कि if the वो rail अगर पटरी पे चढ़ गई, so it will get to the station kind of a concept. So there's still a range of how you can think about it. But otherwise here it's something that you can't predict.
Yeah, see, FY21, FY22, at least in the startup space, were the best years, right? I'm sure most of the investment banks were on deal phase only for 12 months.
Absolutely.
Because there were so many deals happening. Now, suddenly the market has changed. Now, I'm sure there are deal phases, more non-deal
But
phases than
it
deal
overlaps
phases.
too, right? Like
Yeah,
I
it
remember
overlaps.
during COVID, right? We were all working from home, but we were getting killed, right? There was no like we were getting hardly any sleep. Every day we were working. There was either you were executing deals or you were going and pitching so many more deals. There were so many deals both on the private side and the public market side that I still remember that I would have like 3-4 pitches in a week. And I'm working on my existing mandates where he's talking about, that never-ending battle to get data, organize data, sort data, then give it back to them. So it's so many things happening together. So when it gets crazy, it really blows out of the top that way. That you're handling multiple tasks, and that's where diligence is important, of being absolutely on top of what you're doing. This noting down on a notepad or that OneNote thing came in handy, because otherwise you lose track. It's impossible. My phone is filled with reminders or with different things throughout. There are alarm ringings ki you have to call this guy, follow up, chase on this, etc. etc.
I think in this field, the margin of error is very low.
Yeah.
I mean, maybe once you can, but I think the second time you cannot afford to make the mistake.
Otherwise, you'll get fired.
I mean, it's
Not
not about
fired.
getting
Not fired, yeah.
I'm
Maybe
just- I'm
it's
just
not
kidding.
about getting
Depending
fired.
on
No,
what
no.
situation, right?
I mean,
You lose
if
business.
you lose business,
That's-
and if it's a very big business you have lost, chances are you might
get fired
next
of
year.
course.
Yeah.
Keeping notes is honestly integral in this business. Like you have to keep, like you said, OneNotes have to be there at all points, and you have to keep glancing through them, because if you miss one thing also, and if you miss the timing of it, you can get in
A
trouble.
lot depends on you, right? Because a lot of things are dependent on you taking a call at a particular time. It will determine what the deal time, etc. can be, right? My decisions of making sure that the company is ready with the collaterals, all of those you're actually, even as a junior in investment banking, your efficiency matters a lot
A
to the
lot.
entire
Yeah,
process.
absolutely.
So that's why you need to be like an absolutely well-oiled unit, going all guns blazing, and every member has to be equally efficient as the other. So it's very
Absolutely.
I
important.
think one of the reasons why you see investment banking firms are not very huge firms, right? Because the amount of work that we do, ideally we need double the strength.
Yeah.
But we are not. The reason being that when you have a close knit team, right, you can keep a very tight control over what's the quality of work that goes into, right? Larger the team, difficult to manage in terms of quality and timelines. Smaller teams, obviously, everyone in investment banking is overburdened with work, but that ensures that deal is getting done. Right?
And
Work
the
is getting done in the
flip
right
side
way.
is you getting paid more, right?
That's
you're
the
doing
yeah,
so
that's
much
the
more.
The reward is
Yeah,
higher,
absolutely.
yeah.
Lesser mouths to feed with
Yeah.
the amount that you pay.
But back to the deal phase and non-deal phase. So what we noticed in the last year was that even though, because fundraising in general came down, because of that, we saw a big jump in M&A activity. Like for the last year, maybe 2 years now, M&A activity has gone up drastically. Everyone wants an exit. Everyone wants to, get in with a strategic investor, grow their business via a strategic.
Yeah.
And that's a growing trend. I think that consolidation is going to happen throughout industries. And it's going on. Unorganized to organized. A lot of that stuff is happening.
Right.
So
Can you give some examples there?
M&A.
M&A.
So, M&A, I think on the top of my head, Yoga Bar got bought over by ITC.
Right.
So, I'm sure linking up with a strategic over there will help grow their business drastically, because ITC is on every single Kirana store that you can find. So, more touch points, more reach, all of that. That is all stuff that is assessed at one point before this transaction goes down.
And you look at edtech, right? Edtech, that's the first place where everything started booming, right? After COVID, the amount of capital that started flowing into edtech firms across the board was phenomenal. But then over a period of time, people also realized that you can't have so many winners in that particular space. So you ended up seeing so many acquisitions happening. So the market starts clearing itself when the equilibrium sort of, gets disturbed. So consolidation then becomes the way forward. And you'll see that happening in a lot of other spaces. He's talking about packaged foods, you'll see that happening in BPC, beauty and personal care. Again, many firms have sprung up, have raised those initial rounds of capital, but not everybody will win. You'll see the likes of, Unilever, Mamaearth, all of these guys who become much bigger, gobble up other guys to beef up their portfolio of brands. So that's how it'll play out. That's how the market will move.
And it's also a factor of if it's your funded company, right? Your investors will want an exit, right? Ultimately at some point in time. So a lot of funding that have gone into the companies in the last 4 or 5 years, in the next 1 or 2 years, all those investors will want an exit, because usually the investment horizon is 5 to 7 years for people, or VC also, I think most cases.
3 to 5,
3 to 5.
5
So
to
you
7.
see a lot of M&A naturally picking up, even if the company is doing good, but because the investor wants an exit, M&A is one of the exit option, because not all companies can go into IPO, right?
Right.
So that's one of the reasons why you see a lot of M&A or consolidation already picking up, and also I think it will go further in the next 1 or 2 years.
Correct. No, I agree about the edtech. Since I have been in the edtech industry, I completely agree. All these players, like even the big ones, Upgrad, Plus Plus, or even Eruditus, Byju's. Of course, Byju's have acquired a lot of companies. But all these companies, I think the edtech acquisitions have happened in the last 2 to 3 years, at least, with what I've seen. And one of the major reasons was also because they wanted to expand. Now, what I've realized in the edtech space is that every edtech giant is now getting into the offline space, because they've realized that in the COVID, online was the game, but after a point in time, people want that offline network, touch points, and all of that.
Absolutely.
So people like, let's say, Physics Wala and companies like them, they've also acquired some other companies to just get into the offline space. That is something which is happening in the edtech
And you
industry, is
spoke
what
about
I've
Physics
realized.
Wala. In the last 18 months, they've acquired 9 companies and they've diversified their offerings, right? They were doing medical and engineering. Now they've added civil services, bank, PO, all of that. So that's actually a classical example of consolidation. At play.
They've also got into the CA coaching as well. Like they have started CA Wala. They've gone into, I think, a lot of commerce coaching as well, like apart from CA. So I think that is something which is happening in the industry, is what I've also realized. Let's move on to the how to get into the investment banking part. So this is something which a lot of people would want to know. So maybe if you can tell your stories of how did you get into investment bank, that'll be good to start off with, and then we can discuss the skills that are required to get into the investment bank. We can start off with you.
Sure. So I think my story is interesting because you don't find a lot of masters in economics grads in investment banking, right? So my plans changed. I was initially trying to prime up myself to become an economist, and that's how my interest into masters in economics. But we had Nomura Investment Banking come for a summer internship, and I sort of got into that. I had an inkling for finance, and I did the internship, and I loved the environment. It was extremely challenging.
How easy was it for you to get into Nomura?
So I think, it was, the good thing was when they came to recruit, they were not expecting prior financial modeling skills or any kind of, even knowledge of financial statements and all. But they were expecting you to have a good, solid logical brain. So they'll have those typical, puzzles or riddles or everything, math-based logical problems to solve, just to check all of those skills. They would then, you also were able to stand out if you were well read in terms of, knowing about deals that are happening, just knowing about the field. And the biggest thing was that it was a lot of a fit interview also, in the sense they wanted to check that do you have that hunger, resilience, and persistence. Because I'm a personal believer of that. Now that I have juniors under me, when I'm interviewing folks also, for me the hard skills, as we call it, right, the knowledge of accounting, modeling skills, these can be taught. You come in, you will be able to learn. There are structured training programs. You learn on the job as well. But your attitude, your outlook towards that, I want to learn, I'll be working hard, I'll be pushing myself, is critical, because that will determine your success in the investment banking environment, how you're able to continuously, work under that hard-pressed environment without getting demotivated, how you come to work every day with energy and, have that learning curve and that willingness to sort of learn. So that's a key element that's very important, which I believe that I was able to display. And then I of course worked my ass off in the internship. I would like work from 10 a.m. to 5 a.m., sleep in the office. I had a brush and paste like in my at my desk. I had change of clothes also. I was like, I'm gonna do everything here. I will work with multiple teams, and I made sure that everyone on the floor knew who I was, and hence I had those many vouchers or backers for me when the time came, right? So that I believe helped. That's how I broke into the industry. And yeah, it's been 6 years now, and I think it's been going well.
So, what were some of the interview questions that you were asked both when you joined Nomura as well as Edelweiss?
So I think while I was interviewing for Edelweiss, that'll be more relevant
Yeah.
because the Nomura ones is a different. As I told you that it was a different.
Yeah,
interview
but just
back then.
maybe before that, the Nomura one, right? Like, so you're saying it was more on the attitude and drive rather than the technical skills. So, is it necessary that people, so because this is one myth that people have that, okay, you
Sure.
need to have financial modeling skills, you need to have the accounting analysis, then only you'll get into investment bank, which is not the case as you mentioned.
So it depends from where you're recruiting, right? If you're recruiting for a replacement hiring for somebody who's had to either have experience or, so let me explain that to you, right? So for example, a lot of the bulge bracket, a lot of these global banks go to campuses to hire freshers, right? So say a Citi or a JPM or a Goldman is going to the IM ABC campus. Now there also you need to know those technicals because you're expected to, because you're learning in that in the course, but also they see the softer aspects quite a bit, and they're able to because they come when they interview you. Before that, one day before they come to the campus to do the company presentation, they hang around in the campus in the evening and night. You get multiple opportunities to go speak to them, show your sort of eagerness, spend some time with them, give them a shade of your personality, and you're able to show that because you have multiple rounds of interviews as well, right? So that component is something that is looked at. Now when say a Nuvama or a Ambit or Kotak, they're hiring for somebody say has left the team. A lot of times you have to understand in the domestic banks, they don't really necessarily go to campuses to hire in big bunches, right? A lot of times the teams are set and replacement hiring is happening. Say a colleague of mine left for some other opportunity. Now I'm hiring for my team. Now that person has left with certain experience. He was pulling weight and doing stuff in the organization. I'm looking to replace him. So I will interview with that lens. So then the role of technical, whether you've handled XYZ, even if you're not from investment banking, we like at least personally when I recruit, I'm not just saying you have to have investment banking experience. I don't define it that much. I would say that you come from similar industries where you know how to handle pressure. You've done multitasking. You are adept at PPT and Excel. You're not like absolutely going to struggle with it because you're going to hit the job running from day one, which is different from when I went to Nomura. I had a 1 month long training session. I was in classroom. Before even I hit the desk, I was sitting in a classroom with my cohort of new guys who had joined, and we were spending a month in training to get us ready to
What
even
was
become
that training
conversant.
on?
So that training was for everything. So we had classroom trainings for learning basics of accounting, where absolute basics: what is the statement, what is balance sheet, what is the flow concept, how do you link the three statements. You had modeling Excel exercises that you got. You had it was a proper classroom. You got daily homework and everything. So it was a very good environment to bond also and learn about everything. Then seniors from the floor would come down and take sessions on what is a pitch book, what all does a pitch book contain, what is an IM, what is relative valuation, what is trading comps, what is transaction comps. So all of those basics and everything and we were given material also, right, to reference whenever we want. So that served as a very strong base as an initiator into the entire thing. But that doesn't happen too much in domestic banks where its setups are already there. You have to hit the ground running on day one. So hence you check for conversant, whether people are conversant with the kind of work you do. So again, it will depend. If somebody is coming with experience, then I'll check basic technicals पे. I won't spend a lot of time because अगर कोई 3 साल से investment banking कर रहा है, so I will not ask him कि what are the different connections of the balance sheet, or depreciation goes up by this much, because that's redundant. I would assume that those basics he's got right, but then I'll start talking to him about his deals, and within that I'll try to understand that what was his role. How did he model that company? What were the revenue drivers, cost drivers? What did he understand? What were the kind of challenges that were navigated? I would try to deeply understand the kind of work he has done. Then maybe I'll give him a small case study. This is a particular investment case. You build a deck and a model and give it back to me. I would then, So it's a combination of. There's no one right approach to that. Yeah.
Got it. That's helpful.
Yeah. So I think like Nilesh said, lateral hires are fully different. Like when you've already got, say, when you want someone with 3 years of experience already, it's with 3 years of investment banking experience, it's completely different. You expect them to know certain items. Uh, we at an early stage company give a lot of importance to deals, because if you've, like I said, we have certain deals, certain sectors that we like, we tend to do the deals within that sector. It's somewhat of a comfort zone also, and something where we have more expertise also. And more firms, more VCs, PEs recognize you in that space because you've done deals with them or you've gone to them with those deals. Because of that, the type of deals that they've done, not only sector, because sometimes a few sectors have similarities. Like, there are certain sectors that are manufacturing heavy, they'll have more capex, etc. There are certain sectors that don't need that. So just to give you an example, so that they would look at those kind of deals, see if that works well with us, if we can work with them. Now, for example, someone that's in a tech-based IB, they're not going to look at some guy who's done deals majorly in heavy engineering or manufacturing or something like that, because it doesn't make sense for him. So that's really important. Then the second thing is how much curiosity they have. Like, and you can assess that, I think, when you just have maybe a face-to-face conversation with someone, sit for maybe half an hour, 45 minutes, and you can tell what they know, what they don't know, within the space that you care about. Like, they could know a lot of other things, but that doesn't matter. Within our space, we have a chat, we can assess based on how much they already know, and that could talk about how curious they are. And drive is just like insane. But drive in the right manner also. Like, there are people who create, like, we obviously, there are we make them create draft IMs, draft FMs. It doesn't necessarily have to be very, very technical, the FMs, because a lot of people get scared when they're asked to make an FM during an interview. I don't know why that happens, but we want a basic structure to get out their understanding, which is why our case studies are usually pushed in a certain way. We want them to think that our company wants to bring out ABC side of their business. So model it to do that. That's really important. So we get into the nitty-gritties, but at the same time, we look at it more holistically, because I think because of the small team, it's really important to focus.
So what was your story? How did you get into investment banking?
So mine was a bit of a funny story. So I worked at Deloitte prior to this. I worked in the restructuring advisory team for.
This was after your graduation?
This is after my graduation. I'd started pursuing my CFA while doing that. So while I worked at Deloitte, we worked in restructuring, but it was majorly for companies that were outside of India. So while I liked doing that, like I said, if you just read about companies, you'll tend to know that the workings of companies outside of India and the workings of companies in India are fully different. So you're not going to be able to see what you apply here may not be applied in India at all. So that's not something I was very happy with. So a friend of mine a senior had recently just moved to another boutique. So I hounded him. I literally went to him. I was like, listen, it's okay. It's okay. I don't even mind taking a pay cut. I'm willing to do that. You just put me in this, because he was a friend. We spoke about this stuff a lot. And when someone talks about it, and when someone talks about something with passion, you tend to understand that, okay, this is a space where I want to be. And I think because of that, just because of these conversations, he kind of understood where I want to be. And that played a big part in him speaking to his boss. And of course, his boss did his due diligence, a lot of it. Like, it took me about a month, which is actually not much, but for a boutique, it is quite a bit. It took me a month for him to say yes after 3 rounds of interviews. After that, I moved to Mosaic Capital. It's been great. I work under a very senior banker. He's in his 50s. So he's done deals throughout sectors, and brilliant experience. So I applied again, multiple rounds, technical round, just a conversational round with him, and then a project that you could make.
So prior to Mosaic Capital and Deloitte?
There was a small boutique that I worked at prior to that also.
Okay.
Yeah.
Got it.
So so I think I just stumbled upon it, and it's been a great.
So how did you get to know about the opportunity? How do people get to know about the opportunities of getting into investment banks?
In general? Yeah.
So you have the likes of Michael Page, Native,
Yeah.
Indusion, and multiple recruiting firms.
But
HR
usually they will
consultancies.
reach out to the candidate, right? I'm asking
No.
if someone wants to get into investment banking,
So
how they can reach out.
maybe I think what Nilesh and Darren is covering is more on lateral hiring and maybe slightly one stage higher. What you are referring to is mostly
Fresher
entry
hiring.
into breaking
Yeah,
into
yeah,
investment banking. So that usually doesn't happen through
nahi,
consultants. Okay,
Yeah.
consultants will reach out to you only for lateral hiring.
What is lateral hiring?
Lateral hiring is when you're already working.
Replacement hiring.
Replacement hiring is lateral hiring. For
Got it. So
example, right?
maybe 3 years, 4 years of work experience.
Even 1 year.
Even
See,
1 year, no?
the moment
doesn't
you
matter,
enter into
yeah.
investment banking
Okay.
and then you go to another firm, you are a lateral
It's a
hiring.
lateral shift.
Yeah.
Horizontally,
Got
आप
it.
एक firm से दूसरे firm में
Correct.
shift
Got it.
Early stage hiring happens in a slightly different manner because the pool of candidates who want to get into investment banking is extremely high, right? So there, I think it's more about reading about the firms that you want to get into through LinkedIn, through your friends and all that. Because see, investment banking, people have to understand it's a very small industry.
Yeah.
Right. Mostly it's lateral hiring. Mostly.
Yeah.
Growth hiring is extremely small part. Obviously, in the last 2-3 years, we have seen a lot of growth hiring happen because the industry has grown significantly because of the investment activity in the country, and in long term, it will grow. But usually, it's a lot of lateral hiring because people join, work for 3, 4, 5 years, 6 years, then they leave. Then there's a space vacant for that, right? Because you have to keep as we discussed earlier, right? The teams are extremely small. You do not expand your teams 2x or 3x every single year. So it's mostly lateral hiring. Early stage hiring or the entry level hiring is very different. It's usually through your connections, your friends, or you know someone, not maybe friend. You know someone who's working at IB.
Yeah.
You saw, let's say, a LinkedIn post that particular IB is hiring. You apply through it. Right? If you are a part of any MBA college, you hire through or you go through campus hiring and all. That's different process. Well, there's a fixed setup for you, right? If you're a chartered accountant or if not an MBA, let's say pre-MBA roles, because these days a lot of investment banks hire for pre-MBA roles also, right? That's where you get to know your friends, your LinkedIn posts. There are portals also, I think some IM jobs and some portals, they will have some names. Or you directly reach out to some HR on the LinkedIn that this is the IB HR, maybe you've come to know. And
So
you
from
reach
what
out
I
to them.
understand, there is no structured process as such,
So-
right?
Definitely.
For
In
entry
terms
level,
of
it's
getting-
not.
Yeah.
For pre-MBA, it's not.
Yeah.
But if you are from MBA college, there's a whole setup that you get for getting into it. And then for lateral hiring, you have headhunters who will
Consultants.
I
yeah,
think
consultants.
I would like to add a dose of reality check to this, right? Because the reality is that the number of people wanting to get into investment banking is way more than
Yeah,
spots
absolutely.
available, and that is
What,
not going to change.
how many spots are available in 1 year in investment banking? Any idea on that?
No, I think it's very difficult to put that number, but
Attrition is also
if I look at the mainline banks, right? Like if I have to pick the top domestic banks and add on to the global banks, that pool of say 25 banks, top 25 banks in India, on average, again it depends, right? Because it's cyclical. Attrition is also cyclical in that sense, because if you're in a deal phase, you want to make that bonuses and you want to not leave a place because a bonus chhod ke nahi jaoge, right? So, but then when attrition happens, when you made those post your bonus cycles or 2-3 years of up cycles you've seen, then you want to move on. So then the attrition can happen 20 to 40% also in some cases, right? So on average, if I have to say, then in these top 25 banks, say 50-60 odd positions would open up, right? But like, don't hold me to the number, but it can vary quite a bit. But to come to the real point, right, now you have to understand that in India, to get into any elite opportunity, it's extremely competitive and you need to signal right? Signaling tools are what are used as filters. Why is bulge brackets will pick up folks from IMABC or say Lucknow or Indore, like you LKI, that the LIK, IMABC LIK, sort of the acronym that goes around. And in pre-MBA also, you'll be looked at from SRCC, St. Stephen's, some maybe from LSR, some folks from NM, because Bombay, that's an advantage, right? In Bombay, being from the top colleges in Bombay also gives you that exposure because you're close to that proximity of the financial capital. But otherwise, it's extremely difficult because the pool of people from those elite institutions also who want to vie for these opportunities is very high, right? And from CA point of view also, mostly if you're a CA ranker, then you get like exclusive access to those, and you would know about it, right? You get access to a lot of these elite opportunities because you've proven your mettle in that sense on that front. But a lot of people ask that should we do CFA, will that help, all of these type of things. To be very honest, it will not help alone. It will not help, and I want to put that out there.
True.
That it will not help you. A lot of people think कि मैं CFA कर लेता हूँ, मेरा undergrad, मेरा ये सब नहीं matter करेगा. That's not going to work out. CFA, if at all, पहली बात तो it starts making sense in L3. आप charter holder हो, then you've actually proven your mettle, because आजकल L1 L2 वाले बहुत हैं, to be honest. So if you have a no, I mean I'm just giving it a little bit of, so you have
two people sitting over here,
Even me, no?
3 people sitting over here.
I've done CA.
हाँ, तो you need that, but वो भी एक value additive component है. बेसलाइन अगर आपको कुछ लेके जाएगा तो या तो आप अंडरग्रेड आईआईटी बॉम्बे से हैं, अंडरग्रेड एसआरसीसी से हैं, या एमबीए आईएम एबीसी से हैं, तो वो आपको वो एक चीज कैरी थ्रू करेगी. आपको रेड कारपेट भी रोल आउट होगा आपके लिए, वो मौका जरूर मिलेगा. यू विल बी एबल टू ओपन द डोर. इवन इफ से आई वेंट टू आईएम कैलकाटा, मैं रिक्रूट नहीं कर रहा था फाइनेंस के लिए बैक देन, बट नाउ आई वांट टू, आई कैन राइट टू सिटी और हुएवर एंड दे विल टेक मी सीरियसली. आई विल गेट दैट इंटरव्यू. But if you are somebody who's not from those places, it's very difficult. Like, let's be honest.
Yeah.
It makes
I mean,
sense.
the probability of you getting into an iBanking firm, if you're not from the top engineering or MBA colleges, it's or not a CA, it's very difficult.
I think there has been one shift that has happened, in my opinion, at least in the CA category, right? Like you were mentioning, Abhi, CA rankers are preferred. What has happened now lately is that a lot of these companies are hiring industrial trainees. So there's a concept of industrial training where in a period of articleship, which is now reduced down to 2 years, last 1 year can be done as an industrial training in any of these companies like JP Morgan, Goldman Sachs. Even now BCG has started hiring industrial trainees. So this has been a shift which a lot of organizations, when I talk to a lot of these HRs for the placement partnerships that we are doing with a lot of corporates, they are telling that these industrial trainees are as good as a chartered accountant, but they are coming at a very low cost and they are able to give the quality of a CA itself. So that's why what I feel is that after a point in time, these industrial trainees, even if they are not CA final rank holders, will still be able to get a job in investment banking because they already have an experience.
We had this
Absolutely.
exact discussion internally in our team, and the reason why we thought that an industrial trainee of, let's say, 9 months would be a much better option than a summer intern of 2 months from, let's say, not a tier 1 college or tier 2 college, would be because you get those 9 months of dedicated work, right? Because in 2 months, you're hardly into the job, you're just getting trained and then you leave. But 9 months, because you have something or a long time period to take out also something from that candidate, right? And plus, you have a higher probability of that person joining back.
Yeah. We have five industrial trainees right now on our floor. So, and we've had since the last 3 years, I've seen that I've also been interviewing quite a few.
But honestly, I think these number of industrial trainee roles are very, very low.
Very low. Very low.
Not all firms.
And also you have to understand the probability of conversion, right?
Yeah.
Because when they pass out or they are ready to, the bank may not have headcount. So, of course, it's a way. You're right. It's absolutely a much better way to be able to get in through the internship route, get that real experience. Maybe start small at a smaller boutique place because there your skill sets will carry you because you worked in an investment bank, in a proper full service investment bank. And if you're dedicated, you show that you can be trusted with work. We are all happy to, give more and more work because I'm always very happy to delegate more because it frees up more bandwidth for me to go generate and do more stuff, right?
Correct.
So you'll get that opportunity and hence you'll build yourself up so that your skills will carry you through.
So in a way, I think it's because of those industrial trainees you're able to do the podcast today.
Yeah, I think so, yeah. Let me say thank you to them.
I think one way of getting into investment banking that we did not talk about is not the direct entry, but in indirect entry. For example, if you're working in an FDD or financial due diligence role, a valuation role.
Yeah.
I think these are the roles. So because see, as we discussed, right, industrial trainee roles or a summer internship role or a direct entry roles are very small, right? So what do? You cannot not be sitting at home and just waiting कि कोई iBank आएगा मेरा interview लेगा, right? It's always better that you start maybe if you can join an FDD like Big Fours have FDD departments, or you can join a valuation department. So these are very similar lines, are not exactly the same. But because the skill sets are very interchangeable, right? Interusable. So a lot of candidates from FDD and valuation background also, then ultimately 1 year, 2 years, you gain experience, you learn the trade or learn the art on the work, and then you can make a shift to an iBanking. So that's one role, one way of getting into.
But again, one question here which I have is that, okay, so that's one way of getting there, but how do you get in the FDD and valuations then?
There, I think I think for CAs, I think that's a relatively easier role to get into versus an iBanking firm. Because FDDs and valuation department, you have a plethora of CAs.
Yeah, there's a larger intake.
CAs, largely CA dominated industry. Not CA, maybe then you will have a lot of economics graduates over there. You'll have a lot of BBA graduates over there. So I think that's a relatively larger industry.
Yeah.
So it's like you are getting into a funnel, right? Instead of getting to the bottom of the funnel, you just get into one step higher, which is slightly wider funnel.
Yeah.
break into that, and then ultimately you might break into the iBanking funnel also.
Makes sense.
Absolutely. Another one that he missed out was that KPOs. So a lot of KPOs are doing outsourced work for proper large scale funds, PE funds, investment banks. So those guys.
What is a KPO?
KPO is a knowledge process outsourcing firm.
Yeah, and what's the work
So the work they do is they tend to assist a larger corporation, company, etc. With some task. So it could be on the operations side, it could be on the analysis, the financial analysis side, it could be on the data gathering side. It varies. So you have to be able to, again, like he said, to get into that funnel. Another method is via this KPO route, because a lot of them are doing stellar work.
I think global banks you call this mid-office roles.
Yeah,
and
mid-office
sort of, right?
roles.
So if you
Absolutely.
get into
No, I
mid-office
think
roles,
no, that's not what he's referring to. Mid office is separate. Mid office is still that you're actually a banker.
Yeah.
Your team is
Shadowing.
sitting in the global
You're
office.
shadowing
You're shadowing.
someone. Yeah.
You're still doing investment banking. Pure KPO that he's
Yeah.
talking about, there are companies like Equity Knowledge Partners,
Yeah.
Business Information Systems. They are say I'm
Tres
Blackstone.
Vista is also there.
Tres
Tres
Vista is
Vista,
also-
yeah.
Say you're a bulge bracket global private equity fund. You have a 8-9 member team in India, right? Now you can't expect them to do everything. So they will outsource a lot of the things. Ki these slides you guys make, we'll tell you what to put, but just make. ये industry पे research we want, just give me research, look at this. So they spend time doing that research. These are my portfolio companies, these are their numbers. Just agreed upon valuation parameters and models वो बनाया हुआ रहता है. They're already discussing, and those are frozen. So it's more like an operational task of updating and getting that done. So now Blackstone has a portfolio of a global portfolio of so many companies. So they outsource those things that are not intellectually very heavy to these. But as a result, as he said, you get a glimpse into what all happens in this industry. So.
Right.
It's up to you then to be able to extend your skill set, your mindset to break into that.
And it's relatively easier to get into a KPO,
Much
BPO
easier,
role,
right?
right?
Yeah, again, larger intake. So
Huge
larger
teams,
intake
no,
leads
huge
to
teams.
What would be the average team size?
So like a equity knowledge partners, जिसका काम ही है to do all of these type of services that I spoke about, I think they have an office in Gurgaon which seats 5,000 people.
My God.
Because volume is your thing, na? Like if I need a churn for data to come in tomorrow or research to come in.
Wow.
So I'll have to make so many
And
people.
what would be the profile of these people, these
They'll
5,000 people?
be
Mostly graduates.
Mostly graduates from any
graduates.
college or graduates from tier 2, 3, 4 MBA colleges or all of that.
So they would be at an average package of, let's say, 5 to 7 lakhs per annum is what I assume.
Yep.
Entry level,
There you don't go for you don't go for packages over there. It's more about breaking into subsequent roles. You can get into front end FDD evaluation, front end investment banking through these back end of outsourced units.
Yeah, you'll see their attrition rates being very high because of that very reason.
So what would be the typical attrition? It's 25-30% is what I assume.
Surely.
But even if that's the case,
But
like
नहीं,
they
नहीं,
would be
उतना
hiring what?
absorption नहीं है,
हाँ,
उतना
इतना
absorption नहीं
एक
है.
साल में कितने hire
I
करते
think
हैं?
No,
they go into different roles, not necessarily
They
iBanking
don't go
roles.
into iBanking only.
मतलब
No,
बहुत सारे
What I'm trying to understand is, for example, 5,000 people are there. If it's a 30% attrition rate,
नहीं,
so I'm just trying to understand 1,500 लोग इतना hire करेंगे क्या वो हर साल?
नहीं उतना नहीं होगा, because I'll tell you. So उधर भी attrition, so there are multiple roles within those firms also. वहाँ पे भी for every vertical or service they have a sales component. तो वहाँ नहीं होगा उतना, because वो तो वहाँ पे business generate कर रहे हैं.
Correct.
So वहाँ पे you want to still stick and rapidly rise. Maybe some people want to internally transfer from execution side to the BD or the whatever side. So that number is nuanced in that way too. वो direct, because उतना तो absorption ही नहीं है into all of these.
Got it. Makes sense. Any idea how can people get into these KPO, BPO roles? Again, it's like campus through campus, or they can apply?
I'm not too sure, but to be like, either they advertise roles also regularly on LinkedIn, IM jobs and ये सब में
A lot
platforms, yeah.
I think they do a lot of these kind of blast sort of reach outs, and some like MBA colleges also they go to as like to recruit from campus.
Got it.
Yeah, campus recruitment.
No, I think this brings out a very important point of discussion also. Nowadays, what people think is that, okay, even after you clear your CA exams, right, what happens is that I want to get a full-time role, I want to get a package of, let's say, 15 lakhs per annum, 20 lakhs per annum, and now I've done my CA, so I am at least eligible for getting this. But I'll tell you a very simple example of one of our friends, Manthan and my friend. So he got into Bank of America after getting a CA rank. And then for Bank of America, he was an intern for 6 months. He was not even like paid the amount of salary that he's paid today at Bank of America, because he was not at a full-time role. And Bank of America had that model that if you perform well in the next 6 months, we can give you a full-time offer at the 7th month. If we think that you're still not competent, we'll give another internship for the next 6 months. And then after the end of 12th month, we'll decide whether to hire you full-time or not. That is something which is very underrated in my opinion, because with that internship of 6 months, he converted that into a PPO, and then he got into Bank of America. And at Bank of America, of course, like the packages and all, it's like very lucrative as well. But that is something which is quite underrated in the sense that internships, even after you clear or graduate for 6 months.
One very important realization. Very.
It's a low number.
Those are increasing slightly. But the point is, I think the point that he's making is, I think any people should realize that, especially for CAs, right? You do not have direct access to investment banking firms, right?
Exactly.
Because even today, and it's opening up. But even today, most of the iBanking firms, and for that matter, even consultants, MBBs, right, McKinsey, Bain, and BCG, right, even they still prefer MBA graduates from tier 1 colleges, mostly, right. So if you want to break into any industry, right, which does not give you a red carpet entry, right, you cannot be expected, you cannot have very high expectations of having that direct access, right? You need that alternate routes, and that's what we were talking about, right?
Exactly.
FDD, evaluation, or KPOs, or mid-office, or internships, right? So these people should have that open mind to get into these roles, learn the trick, learn the trade, right? Work in these firms, like say for 6 months, 1 year, 2 year, and then try to make entry into roles like investment banking if you want to, right?
Yeah, and you're right. This 6-month internship with the Bank of America will have way more value than a full-time FTD role, full-time.
So for technical, so he was
anything.
only technically an intern, but he was working
of course,
almost
yeah,
fully like an full-time employee,
which
right?
which will come across when you interview, no?
Absolutely.
Yeah, exactly. Let's talk about the most important topic of the conversation, which everyone wants to know about, the salary ranges of people getting into investment banking. So maybe we can break it down. We can make it, let's say, hierarchy wise, or maybe at least what people can expect as a fresher, and we can break it down into domestic versus boutique versus bulge bracket if that is different.
So I think to go by different categories. So if we look at bulge bracket, right? Bulge bracket salaries at a starting level will be, I think, 35 to 45 lakhs per annum, starting absolute first year analyst.
This is fixed plus variable or only
No,
fixed?
this is only fixed.
Only the fixed.
Variable can be anywhere from, at a junior level at global bulge brackets, you make 80 to 100% variable.
And this is again, I think, this is post MBA.
Okay.
Yeah.
But even bulge brackets and all, they don't have so many pre-MBA roles anymore.
Whatever it is.
Yeah.
Pre-MBA
Post-MBA.
do not.
This is not pre-MBA. Yes, just to clarify, ये post-MBA hai. Post-MBA you start
And I think when we say post MBA, post masters, not necessarily an MBA.
So one thing you have to understand in India is that in the US, after undergrad you start as a first year analyst, and after MBA you start as a first year associate. But in India, after MBA or masters, whatever, you start as a first year analyst.
Okay.
That's,
I didn't know this.
That is something that is true for the Indian market, right? So yeah, 35 to 45 is where you start, and then as you keep going up, associate will make 60, 55, 60. You spend 2 years. Now what's happened is a lot of these guys have a 2-year analyst program, 4-year associate, and then you make VP. When you're making VP at a global bank will make anywhere from 80 lakhs to 1 crore. Then EDs will go up to say 1.5 to 2.
EDs is executive directors.
Executive directors. Then managing directors again will depend. Like, so a lot of the well-paid managing directors will clear million dollar salaries, so that 7-8 CR and upwards, like India heads and all of those guys. Then coming to domestic banks, domestic Indian banks. There for a pre-MBA. Now here the pre-MBA concept will be valid. If you have a pre-MBA guy coming in, again, so one thing that's different in global and domestic banks is global banks have very set slabs. Domestic banks may not necessarily have that. So your prior income can be an indicator of what you make at this particular place.
That's changing slightly.
It is changing. People are moving
You'll
towards
see a lot of
that.
domestic banks have very set structure these days. कि pre-MBA इतना है, post-MBA इतना
Correct.
है,
They're
second
moving
year
to
associate.
that. Because it's important to do that. It eliminates any kind of insecurity.
Yeah,
You know where you're
absolutely.
supposed to be.
At least the range. If
The
not,
range is
Correct. Range
set.
is there.
Yeah.
So what's that?
So for example, it'll be if I have to give you a broader range, it'll be anywhere from say 14, 15 to 25.
Okay.
Right? 25 again, you have to be from IIM ABCs joining. This is undergrad, right? So
Undergrad.
SRC CA and all of those, like absolute top guy, elite guys will be offered that kind of package. Now coming to post MBA, when you break into domestic banks, it is again the range is anywhere from 18 to 25 or even 30. Like that is the broader range. Then AVPs and all at these places will make about 35 to 45. VPs and all would make about 60 to 70, right? Executive directors in domestic banks would make between 70 to 90, right? And MDs will make 1 CR upwards, then but MDs also will have a lot of variability depending on how big or a heavy hitter banker you are in terms of your PNL contribution. So as you keep rising up, within level variability of pay is huge, and within level bonus payouts are absolutely insane. Because if I'm an MD, say we both are MDs in the same bank, you had a bad year, you didn't close anything, I closed 3 deals. I'll make like insane amount of money over you, right? Because you are rewarded. I got in money this year, you didn't.
Yeah.
So that's how.
And the risks keep increasing as you keep getting promoted, right? The good thing about investment banking role is there's no ceiling to your earnings.
Yeah.
The more number of deals that you do, the larger number of deals that you do.
No, but I think the variable bonus will be limited, right?
No,
to a certain
no,
extent.
no.
At MD level, it's not.
I know folks
Not even
who got
MD, I
in
think.
400%,
Yes,
4x,
400%.
Yeah.
Wow.
COVID year was insane. COVID 2-3 years was crazy.
I think some domestic banks have a cap at the low levels. They have a cap on the percentage
floor,
that you can.
floor usually
Which
have.
will not come across as a cap, but like
of course.
very
the cap
exceptional
is,
cases. So say you can say 100%.
100%, yeah.
Will be a capish
Got
sort
it.
of thing.
But that's again for the just to say. But I think people get paid.
Exceptional
But the
people,
point is, I think
yeah.
in a lot of these domestic banks, because the culture is slightly different from global. See, global banks have that hire and fire culture, right?
Yeah.
If you're performing, it's a very
Yeah.
good year, you'll get paid crazy amount of money. If it's a bad year, you'll straight away get fired. Domestic banks,
Are
you
these
don't-
global banks laying off employees as well?
They have.
They
This
do,
year.
no? They do. So how it works is, as like, it's not a rule as such, but if you're an MD at a global bank, you have a 3-year sort of a runway, as you can say, to deliver a certain PNL number. So as you become senior, from ED/MD level, you start getting PNL targets, right? You're supposed to meet targets over a particular horizon. So it's not like 6 months mein you have to do this much, because everybody understands the nature of the industry such that can't happen. But over a 2-3 year period, you're given a particular target that this much of business has to come from you, which is why you are being paid that obscene amount of money in that sense, right? That's why their fixes are also higher, to cover for that risk that he's talking about, because the probability of getting fired from a global bank is much higher than a domestic bank, which reflects in the fixed pay. That's the
So domestic banks, what they'll do is
high risk,
if
high
it's
reward.
below managerial role, right? Usually junior level folks, they'll put they'll not say it out loud, but it's more like a floor and a ceiling to your bonus. In a bad year, they'll not give you 0% bonus.
Yeah.
Because they have to retain talent, right? At that level. Because you're not responsible for the quality of deal that's coming or the closure of the deal. It's usually above managerial roles, right? So they'll give you some bonus to keep you happy even in a bad year. In a very, very good year, you will usually have a sort of a ceiling also that you will not cross that much.
Exactly.
That's in the
this
junior
is the cushion.
roles.
This is the
Got it.
cushion.
Makes
Yeah.
sense. What about a boutique investment bank? What are
So,
the salary ranges
so
there?
in a boutique, it could really vary. It could vary very drastically, and that's mostly because it's about where that company what that company needs at this point in time. So if and of course they'll assess your nature, but it can go down to as low as 5 and 6 lakhs on a fixed basis. We're always focused much more on the variable. In a boutique, they don't have the firepower to pay like a global bank for sure. And so because of that, they're going to be saying that, okay, we'll offer you a higher variable. We usually don't have a cap on the variable, but you'll have to start at a lower fixed. And this is a boutique is that sweet spot where, say, someone wants to make that transition. So for example, like if I want to move from an FTT role, from a KPO role into investment banking, and I might not get in directly into a domestic bank, boutiques could be that pathway to do that. Because eventually when you are at a domestic bank, they're going to ask about your deal activity there in your interview. That's mostly how it goes, apart from all the other technical stuff. So that's the difference between the two. So it's somewhat of that moat. So it can really range heavily, but the growth prospects also change. So within a small amount of time, I think it's visible to tell how the person is performing. So again, like domestic banks, we don't fire talent that easily, like the way global banks do. But it ranges. But it can start at a very low fixed of 5 and 6, and it can go.
Just to add to
much
that, a layer to that is that boutiques also differ, right? A
Yeah.
Moelis is a boutique, an Evercore is a boutique. They, in the US, Evercore and Moelis pay way more than bulge brackets.
Yeah.
because they are absolute M&A and private equity specialists doing multi-billion-dollar deals, and Evercore has been killing the tech scene in the US, right? So
So
the
how
amount of
is
money.
how is that called a boutique bank?
Because they
Boutique
do
is
not
not the boutique is that you choose to focus on a particular thing. So they don't have a capital markets team. They
Yeah.
don't do debt.
Only
they don't
one
have
sector, or sorry,
not
only
sector,
one
it's a
kind of
advisory,
product.
advisory,
Advisory,
business.
a form
I
of
will-
advisory,
I will
yeah.
only do M&A and PE raises. That is going to be my boutique focus. I'll be very light. I won't make a company structure, have like so many departments, all of that. I'll have my heavy hitter banking team sitting out doing big deals, large deals. And that's how it started, right? Like Moelis is Ken Moelis is ex UBS. He was global head
So
UBS.
usually you will see
went
a
out.
lot of these boutique IBs being started by ex-veteran bankers.
Legendary bankers.
Right? Who have, let's say, worked 30 years in
Yeah.
these global banks or even domestic banks, and now they want their own entrepreneurial startup, and then they'll start something, and then like, okay,
And
I have a small team.
who have name tags to pull these deals on their names,
Yeah.
not the company's name.
Correct.
Exactly.
Okay.
So when you become that guy where your name is bigger than the firm, or your name can get you those big deals, then you choose to move out and keep the moolah to yourself, right? Like
Right.
instead of
Absolutely.
being in a company structure.
So when are you guys
Absolutely.
starting your own investment banks?
Yeah, that's
Few
quite
decades away.
I mean, it happens though. It happens. I know someone who's about my age, which is about 27, who started his own boutique bank last year. They've been closing deals. They've been doing
Is it?
well. Yeah, but then again, they fall in boutique territory. They don't want to do more than what they're doing, and they're happy with that. So 2 deals a year, like he said, most of the money is kept to you. So
Yeah.
they're much more than happy, and they would probably earn that at a much higher level. So they're happy to do that, and it is possible. It's
Right.
possible if you get adequate experience. You just have to take that step, and you have to, most importantly, have those contacts.
Yeah, if you're able to
Yeah.
build deep networks into
Yeah.
a market which is large enough, is relevant enough, then why not?
Yeah.
You might have that because to start an advisory firm, it doesn't take much, no.
Yeah.
Right.
It's not, no capex is required as such. You can go tomorrow and start your own thing and originate mandates and get some guys to make PPTs for you.
Right.
That's not going to cost you anything.
Right.
In the end, it's a services business.
Absolutely.
Yeah, makes sense.
Yeah.
What would be the unit economics of these business models, in the sense that scale wise, as you mentioned, it's a services business, so scalability becomes a challenge in these kind of businesses. But in terms of profitability, margins, major cost items, how would that range out?
I think the single largest cost item in all these investment banking
Employee-
or any advisory
employee
firms,
cost.
employee cost. I think that will form a bulk of your cost.
Any idea what would that percentage be as a percentage of revenue?
I think it will differ depending on the kind of year that you have and kind of bonuses that. See, it all depends on bonuses, on the amount of bonuses that you're going to give out to your teams and all, right. In a very, very good, let's say not defined as good and bad year, let's define as in a very generous year where you've given out very generous amount of bonuses, your let's say employee cost could be as high as 60% also maybe. But if in a year where you haven't been as generous, it could be 40-50 also. On an average, I think an iBanking firms can make a profit in the range of 30 to 50%, somewhere depending on the size, scale, setup.
Yeah, because
what
there
that
is
you
no
have.
other, like your, of course, fixed costs of office, all of that.
That's the
Then
second,
you-
another cost that you're missing, travel cost.
yeah, your
Yeah.
Travel
travel,
cost.
which is also
It
quite
to the
looks
client,
like,
yeah.
but looks like
A lot of
honestly
it
it's a
is
huge
built to the
amount.
Yeah.
But
Honestly, it's a huge
your
amount.
BD expense you don't bill to the client, that's
Yeah.
billed to the firm.
Yeah.
But a lot of times you're working on so many mandates and everything which is fully reimbursable. So that also doesn't hit you in full measure. Then you have some databases like say Bloomberg, Thomson Reuters, all of these sort of tools and things that we need access to, which comes up. But employee cost is the cost, right? And in very good years and all of that, so profitability is bound to be higher that way. But it's cyclical also. In a bad year, then you're not making anything also.
Right.
That can
Yep.
also happen. So
Right. So Isma, I think the travel cost and employee cost is the major one. I think you mentioned the software cost. Let's touch base on that. So usually, like, what are the major subscriptions here in terms of software costs?
Sure. So there are multiple outlets, and so there's VCC Edge, there's Traction, there's Bloomberg, there's FactSet, there's Thomson Reuters. They have a tool called Thomson. There are multiple. They are used for different things, right? So your Bloomberg terminal will give you a lot of listed equities related information. FactSet has a lot of global company data. VCC Edge is the preferred. VCC Edge is really preferred for domestic Indian companies, their deals. Venture Intelligence is another platform. So everyone has a comprehensive offering because it elevates your content, it elevates you and helps you look smarter and
Right.
speeds up your analysis, which is needed. The kind of timelines we have to churn out
Correct.
pitches and everything.
And
So-
what are the usual costs of all these subscriptions?
so again, depends. So like on the cost sort of a structure on this, a Bloomberg will be like at the top, depending on what service you've taken. Typically, Bloomberg is a particular stationary terminal that is situated at one corner of the floor, where any and everybody from the floor can just go to that Bloomberg terminal, get the kind of information they want, come back to their desks. People can have multiple terminals. So a particular terminal, depending on the kind of services you've taken, can be 20 lakhs to 50 lakhs. If
Per
you have-
annum.
per annum. You have multiple terminals, multiply that. If you have add-on access, like every individual team member has also, Bloomberg is now remote access, like Bloomberg Anywhere, right? So you can have that in your laptops. That will cost you additional. So that can range from anywhere 1 to 1.5 CR for, if you have a good full Bloomberg package. Then Thomson also is expensive because it's one of the best sources to download equity research reports, right? We read a lot of equity research reports to build our views on sectors, companies, so it's a very important source of information, and those reports are very expensive to purchase. So you get these quota packages, say 50 lakh worth of reports you can download, 60 lakh worth, beyond which then you have to pay a certain price in dollar terms. So that has a fixed and variable component to it as you go along.
Got it. Yep, that's pretty interesting. I didn't know about the expensive cost. I was under the impression that Bloomberg has that 20 lakhs per annum, but the 1.5 CR and all, I had
It
no
depends
clue
on the
about
kind
that.
of suites
Correct.
of offering, what all
sense.
services within that you unlock. Yeah.
Makes sense. Perfect. Let's also deep dive into the exit opportunities. So, for example, if one gets into investment banking, what next? So, what all they can do after their investment banking career is over?
I think pretty much everything. Because the interface that you have at an investment banking firm with the kind of clients, the sectors, and all, you can do pretty much everything, right? But typical exit opportunities, let's say, from sales side, you try to go to investing role, right?
So, which is a private equity or a venture capital?
VC kind of a roles, right? That's one. Second, a lot of these clients also would want to hire you. Let's say if you work with a client for, let's say, 12 months, right? And they understand or they've recognized that you have a knack for their business, you understand the business very well.
Absolutely.
In terms of numbers and all. So a senior level role, you can get an offer for CFO. So you join us as a CFO.
wow.
You join us as a CEO. You see a lot of investment bankers, senior ones, obviously.
But in that
joining
case,
as CEO.
It's
doesn't
happened right now for
Yeah.
us.
Is it?
So we had Gopal Agarwal, who was the co-head and MD of investment banking at Edelweiss. He has joined as the CEO of Anupam Rasayan Limited,
Yes.
which is a 12,000 crore market cap company. He's joined as the CEO. So that's like one of those absolute top tier blue chip sort of exits into the corporate world.
Wow. But just one, I don't know if it's a silly question here, but like if that happens, so won't that affect the relationship in terms of the smart talent from a bank is now gone to?
I mean, those are
another
always
case?
thin lines, very blurry lines that people want to cross, but people understand that because it's ultimately a professional capacity. Because you completed your role, right? It's not that you're leaving a deal in between
Absolutely.
and then taking away the fees of that investment banking firm and then telling the client that you don't pay the fees. I'll only come. I'll do it in my salary cost.
Yeah.
That's not what's happening,
makes
right?
sense.
You do your deal. You end your relationship on a good note, and
Then
then
that conflict is not there.
it's not really there. Yeah, because these are all professional engagements, right? On an arm's length basis, if it's happening, and everyone is, I think, mostly happy. Yeah.
Makes sense. And apart from these,
Apart from these, I think the newer opportunities that are coming from an investment banking firm is to join startups. Because you are usually a generalist in an investment banking firm, a lot of CEO office roles, right? Or the founders office roles that we call, right? They are very accepting towards hiring a banker because you can take care of the fundraising process, you can take care of the financial vertical, you can also take care of the let's say new strategic initiatives and all. So you can actually do a lot in the finance domain. Even not in finance domain, you can do a lot in the strategy domain as well. So I think founders office roles are something that picking up a lot because startups wave is there. Apart from that,
There's investor relations also.
Yeah.
A lot of people who do a lot of equity capital markets, they get hired by very large listed conglomerates to head their investor relations. That's a different kind of an exit. He touched upon the buy side. That is very common. Aspirationally, people want to go to different sort of larger funds, or even within investment banking, you want to move to a global. If you're in a domestic, you want to move to a global. That also happens quite a bit. That happens a lot more in ECM because ECM is a very small knit world, and every deal is multi-bank.
What is ECM?
Equity capital markets. So all these listed market deals that we were speaking about, and as I was highlighting earlier, that every deal has multiple banks working on the same deal. So say Paytm, it had the global banks also, domestic banks also, and those teams worked very closely. So if the global bank seniors liked a junior working in that, they have an opening, they'll reach out to that guy. So those switches of they're much easier transitions because they're seeing you in action.
Makes
so
sense.
that interview process and everything is not as hectic or as grilling as in other cases where you're coming and interviewing. And in global banks you have anywhere from 10 to 12 rounds, right? You have to meet nearly everyone in the senior level because you work across teams. Domestic banks you'll have 6-7 rounds. So it's grueling, the entire process. But when you're working together on a deal, I've seen you in action, so I have confidence ki, I know this guy, he knows his work.
Yeah.
So you'll have it, say, a little easier.
Right. I think 10 to 12 rounds is too stressful in my
Of
opinion.
course,
I mean,
of course.
10
And
to 12
everyone,
is
like,
too much.
out of that, initially the associates and VPs are grilling you a lot on technicals, right? It's a lot of times you have 6-7 on the same day. You come to the office at 8 a.m.
My
and then
God,
you
yep.
leave in the
Full day.
evening. And some global banks also have, they'll throw in a modeling round in the middle. They'll send you to a desktop and they'll give you 2 hours or 1 hour ka 3 statement linking sort of a model, working model banao. That's a speed test, crunch test, pressure test.
Okay.
And you'll not know that you're going to face that. You might know कि इनके process में होता है ऐसा, but you on that day will be just sent in randomly, वो भी हो सकता है.
Makes
So-
sense.
so
Do they also ask some sort of guesstimates in the interview in investment banking, the way it happens in consulting?
No, not a lot. Very
Not
few.
really,
Somebody
yeah.
might just, but it's not.
They can.
Good.
It would be like a value add more than anything, right?
Yeah.
Like to make you to assess your understanding.
Got it.
I think these kind of questions can get asked during your campus hiring process.
That is more, huh?
Got it.
Because
Where
where
you
you don't
can-
have any technical to ask, right?
Yeah.
Because that person does
Correct,
not really
correct.
have a lot of
Deal work or prior work.
yeah,
ex.
no prior work ex. So there you
Yeah.
can ask guesstimate questions, thinking, higher order thinking questions and all.
And how guesstimates might be asked for even lateral hiring is market sizing something. Ki you worked in this particular industry, break down the market from me. You can go
Yeah.
bottom up, top down,
Yeah.
either way. So
Yeah.
I'll check on that front. Instead of a classical back of the envelope sort of a problem that you
Yeah.
see in consulting, this will be more oriented to your kind of work ex to check the same skills as they would check to.
Makes sense.
But at the same time, I think making a pivot into consulting is also something that's likely if you work at an investment bank. Like strategic roles anyway, like there is some sort of similarity between consulting and investment banking. It's just
Sure.
where the stage of where the transaction is, right? So consulting is usually something that happens prior to when the investment bankers come in. It doesn't necessarily happen in tandem, but or in one line, but it tends to happen like that. So they do see this as, like he said, because it's a generalist role, so is consulting to a certain extent. That's why the pivot is likely and is possible.
Got it. No, makes sense. I think that's a very detailed answer on the exit opportunities front. Let me hit the nail here and ask something which is on a lighter note. What is something that you don't like about your careers in investment banking? Don't worry. I mean, if your bosses are watching, you can make it on a lighter note as well. So Manthan, I think you can start off.
I have to think something.
I think it's the collaboration. Like sometimes you feel like you spent a lot of your day just like setting up meetings or speaking to just multiple people asking for data. It depends on the stage of the transaction, right? So when in the data gathering phase, just looking at a checklist, preparing that checklist, and then just asking for sitting in one line and asking for different information is just it's
Right.
something that's a
That's a
little
low
annoying.
light.
Yeah.
Anything else?
So I think the parts I did not like have sort of diminished for me as I've grown in the journey, and the parts that I really like and I wanted for me to happen more in terms of going out, meeting people, because eventually if you look at investment banking at a later stage, it's about people. It's about your ability to manage people. It's about your ability to understand, interpret, and get what they want and deliver to them, right? So it's way more people management, both internally and externally. You have to manage various stakeholders. So I'm someone who is good with people, and I want to have that way more than sitting at my desk punching in numbers and all of that. That's necessary. That's built the base of where I am, and I was able to come. But I'm glad that that phase is over. But at the same time, that it doesn't free up a lot of time, because you have to always be available. Like an analyst still will submit his work and can then go shut off, but the senior guy will get the call or will have to be even at
Clients will usually call the mid-level guy.
Yeah,
very frequently.
Where is this? Where is that? Even when I'm on leave, I can't, like, I have to be available. I can't just say ki nahi, I'm just switched off. So maybe that is something that is there, but
But I think
I don't hate it.
yeah, exactly. But I think you are told that this is going to be there, right? Like, I mean, you know that is going to happen. Exactly.
Because you've seen it happen.
Yeah.
You've seen your MDs being on a family vacation with their children and everyone also, and yet coming on to calls and taking a status update.
Oh, is
on
it?
kahan hai, wo kahan hai. Yeah, of course.
I think all the
message so much on those WhatsApp groups.
Most active.
WhatsApp has been the peril of everything. Before it was okay. Otherwise, now everyone makes a WhatsApp group and is just, where is this, where is that, what is happening, all of that. So
the desire that everyone has of being an investment banker is the MD's role. No one thinks about the associate role that you have to go through to reach there.
Got it. I think, Manthan, you have got a good time to think now.
I think
You can
in
answer.
general, investment banking, because you're an advisor to clients, right? The lens that they look at you is very different. I think in terms of, see, if you're a provider of capital, right? If you're an investor, clients look at you from a very different lens, a lens of respect, because you're dependent on them for capital. But any consultant, be it a MBB consultant or investment banking firms also, right? Investment bankers, they think that they've hired you for something and then they'll like extract everything from you. And the way they treat you, I think, that slightly, I think the lens, I think, has to change, especially for newer generation entrepreneurs and all, right? For them, it's not like that you're not bought a consultant, right? You're paying fees for a professional engagement, and there has to be a line of difference between a professional engagement and hiring someone. That's a different.
But it's the classic peril of a client servicing role, right?
Yeah.
And unfortunately, it's over abused in India. To be very honest, that in India, we don't tend to respect any kind of personal boundaries, because a lot of people really mix up personal lives or only have a professional life and don't have well-defined personal life time. So then those guys, if you really get on the other side, then but it's actually important to then set expectations, right? And that's what I learned from my seniors, my bosses, that you're not at the beck and call. You are working for them. You're supposed to deliver what you're supposed to deliver, but that doesn't mean that you're at the beck and call. So I think you need to respect yourself to command that on the other end as well, and make sure that you set those boundaries, and they should catch those signals and hints, right? And even after doing that, some people don't. So you have to navigate it.
Because in India, you'll never explicitly tell your clients that okay, these are the boundaries. You have to just make those soft signals,
You have to
convey them, and if still they're not listening, then I mean you are at your own.
You have to navigate it.
I remember. So I'll share one incident. So we were organizing one webinar for KAGR only. So that was an offline webinar. Offline event at BKC. And I had called out 3 folks, and the title was How to Get into Investment Banking. And one was from JP Morgan, one was from Goldman Sachs, and one was from Avendus. And the Avendus guy who was there, he was quite junior in the sense that he had just joined 4 months back. And although he had committed that he's going to come for the event 4 to 6 p.m., what happened was just before the event, 15 minutes, I get a call at 3:45 p.m. Kushal, I am very junior in this industry, and मेरे को client ने call किया है. I told him that I have an event from 4 to 6. I'll do it after 6. He gave me a very weird look, and I won't be able to come to the event now. So that was the response, and I was like कि पहले बताया था तो क्या problem है? Like you had mentioned, right, कि you are not going to come for, like you are not going to be available from 4 to 6. But he was like कि ऐसा industry में possible है ही नहीं. Like we have to be available 24/7. And after that I realized कि मेरे को थोड़ा model change करना पड़ेगा. I'll have to invite people who are more available and not working 24/7.
I think that's more an Indian thing. People here, I think people themselves don't set the right expectations and the right boundaries, and hence you face situations like this.
It is also a function of experience, right? So abhi this guy was very new, but over time, even within this deal, when he would have proved his mettle, client भी उतना ही trust करके leave देता, वो थोड़ी एकदम एक minute गिनेगा. So that's the same thing. Even within the firm, when you have spent a certain amount of years and in the right way, you've delivered over and over during a long period of time, you build that equity for yourself, right? That if I have given something to this guy, ये करके देगा मेरे को, let him do it on his own terms ना, मेरे को काम से मतलब है. So वो भी होता है, ऐसा नहीं है कि it's not there, but yeah, overall market थोड़ा है unreasonable because Indians want everything now. So
we have calls with US investors on a Friday evening. They'll start off with 10 apologies. Sorry for that you're working for us or you're taking this call on a Friday evening, 7 p.m. It's only 7 p.m. and like they'll start off with apology, end with an apology. Thank you so much for taking out time for us on a Friday evening. I don't know. That's the culture
And
that they have.
I was here on a 5-hour call during Diwali. We were on launching a deal, but उस दिन वो call शायद नहीं भी हो सकती थी, but we had pushy people on the other end. तो मतलब वो अब you can't help.
Right. Is there any possibility of changing this mindset or culture? What are your thoughts?
I think the newer generation that comes in,
It is happening actually.
It is happening. Honestly, it's happening. Plus, I think it's also a factor of maturity of the industry, right? In India, we are decades behind in terms of professional setup. All the professional firms, not just investment banking, any firms are very new in India, right? Very young in that sense. Once people mature, once you have that kind of a wealth to command and all, I think these boundaries will start kicking in. And it has to come top down. It cannot be bottom up. I think any firm, even if it's a small firm, if the MD of that firm or the founder of that firm believes in those boundaries, automatically people in those firms will start creating those boundaries.
Makes sense.
But sometimes the lessons of change can come bottom up.
Yes.
And I'll explain that. So a lot of the new generation that's coming in, Gen Zs, right? Because they, like some of us, like we're millennials and we will take this opportunity like very seriously. Oh, our life depends on it. Arey, naukri, ye, wo. But Gen Zs are in general more secure, more free, not too attached, right? So if they face bad culture or a bad environment somewhere, they are very quick to leave.
Yeah.
And it has happened in certain banks where the culture was very toxic and people have left in hordes. So it's really hit them hard ki, boss, we can't have anybody here if this keeps going on. So then the danda comes of, nahi, you can't have this, this can't go on. So it is very important to speak up also.
Yeah.
And that's also happening in the face of exit opportunities, widening, broadening, people starting up. Like, people are way more open to starting up on their own and they're like, ki, yaar, nahi, main gali nahi khaunga, main apna kar dunga kuch. So
Right.
that's also at the base
true.
of it.
Right.
I think the amount of in the pitching when the companies also pitch to the prospective employees, right? Earlier they would say investment banking, that's given that 14 hours, 16 hours, 18 hours you'll have to work. Now people pitch a lot about culture because सामने जो बैठा है आपके इंटरव्यू के लिए, he respects or he wants that culture also, ready to work long hours, but in the right culture.
Right.
So Goldman में globally Friday post 6 p.m.
Pen down.
What are you saying?
हाँ,
Seriously?
जाना पड़ेगा घर. But उसके बाद Saturday बुला लेंगे, Sunday बुला लेंगे.
ठीक है, मतलब that's
Depending on
one
teamwork,
small
but-
step, yeah.
But has they made a rule 6
Okay,
p.m. pens
so
down. सब
Friday
बंद.
6 p.m. but till what? Like 6
full
p.m.
night.
खत्म.
अच्छा
6
बस
p.m.
Saturday को ऑफिस होगा ना?
नहीं ऑफिस नहीं होता Saturday को.
So Saturday को काम मतलब Friday 6 p.m. to what I am asking? कब तक pens down?
Full Friday night. Then Saturday will start working.
नहीं पेन्स डाउन टेक्निकली फॉर द वीकेंड ऑल्सो. अगर आप डील पे काम कर रहे हो, आपको वीकेंड पे बैंकर्स को देखो काम करना पड़ता है वीकेंड पे अगर डील की वो डिमांड है. बट उनका रूल है फ्राइडे 6 p.m. के बाद जाओ घर जाओ, मतलब ऑफिशियली वो रूल है. उसके बाद आपके पास काम है तो आप आओगे वीकेंड पे.
Saturday को अगर आना है तो आ
अगर
जाओ.
आपके
But
पास काम है.
Friday 6 p.m. Yeah, that's a good move at least. मतलब start off
One
किया
small
है.
move I think, but goes a long way.
I also read somewhere, I don't know who said this, but I think someone mentioned that a 3-day work week is also now going to be possible, and if that happens,
I think
then I think
these talks only happen in countries like in Europe, especially Spain. I'm sure majority
there
of
was
these
some
talks
talk in
happen.
Dubai too. He's right. There was something.
I
being discussed
forgot,
in
yeah.
Dubai.
No,
a 3-day
so-
weekend was being discussed. In
no,
Dubai.
that was being discussed yesterday only. I read. I
3-day
forgot the
work
name.
week?
Yeah.
Oh, I haven't
So
heard.
3-day work week. That is something which was possible. Some very famous personality only mentioned. I'm forgetting the name. But that if that happens, then I think.
Elon Musk ही होगा.
नहीं
Elon Musk तो बिल्कुल नहीं होगा.
Elon Musk तो बिल्कुल नहीं होगा.
नहीं होगा, I
Exactly.
think.
He's like a
Yeah.
full-time hustler. What is this is also a good one, by the way. You can think and let me know. What is the silliest mistake you guys have done in your career in investment banking?
Serious mistake.
Silliest.
Silliest.
Yeah.
Luckily, haven't yet. I think.
So I've asked this question to a lot of people, by the way, and I've got like answers where one person, so that guy was in one of the global PE funds, and he had incorrectly sent a wrong email to the chairman of that PE fund, and he had to mark an analyst, a junior guy, but galti se wo senior ko chala gaya, and there were a lot of errors in that mistake, and like that email was not supposed to go there. So that was like
Email
one of
errors
the
keep happening.
mistakes.
Email
And all.
errors.
I'm just giving an example.
Especially for common names, right?
Yeah.
Someone
Yeah.
name like Harsh,
Ankit,
any
Adit.
very common names. You find, I mean, वो हो जाता है कभी कभार. Instead of sending to one fund, you send that email to some other fund.
Yeah.
But I
But yeah,
think-
what are some of the silliest mistakes? Let's have some fun here. People will get to know the other
I
side.
once witnessed one of my seniors. So we were pitching to this particular company in the consumer space only, and that senior basically was giving a whole pitch of the industry, the market, all of that. And at least 5 times during that pitch, he took the name of that guy's biggest competitor. So he was like, the company was so similar in that sense. And the other side, the guy was absolutely sweet to not really, absolutely blow up and say ki bhai jao yahan se. So, but that meeting, it kept on happening, and it's COVID time, so
In the flow, you cannot even stop.
how do you nudge also? What do you say? Because a lot of times your MDs, if you even send them something on chat, they don't look at it.
They don't look at it.
They're looking at the screen only.
No, matlab, in the sense like he was telling the name of the competitors to
Addressing that client maybe.
Say HUL Dabur or HUL ITC, similar companies. Say I'm talking to ITC, right? And मेरा video call चल रहा है, meeting चल रहा है, मैं ITC से मिलने आया हूँ, तो मैं उनकी तारीफ करूँगा ना उनके business पे. अब मैं बार-बार ITC को HUL बोलता रहूँगा, तो वो वैसा एक confusion create होगा. So and I couldn't do much to solve the situation because I was not personally like next to him कि मैं nudge कर दूँ या रोक दूँ. I was sending messages on Teams ki, but then वो flow.
But this is a mistake of your senior.
Yeah.
But I'm asking your mistake. He's
Smart.
like smart.
Right?
I asked a mistake that you guys have done, and he's mentioned a mistake
Or
of
that
his
senior
senior.
is listening.
Yeah.
Or I'm sure he would have come to know later.
Sorry?
That senior would have come to know about this.
नहीं, I only pointed out कि यार आप क्या बोल रहे हो. My silliest mistake, I can't recall, to be honest. Like I haven't really made errors while doing my work, but maybe it could be that, say, when I'm coordinating with, I have 4 juniors in my team. So say X person is working on one deal, other person is on another deal. So I have mixed up कि who's working on which, and मैंने किसी और को दूसरा काम बोल दिया, and that guy is just befuddled कि यार ये क्या बोल रहा है ये. So, and they've maybe not in the moment corrected me, but come back to me later saying that I have no damn clue what you're saying because they're not clued in onto that deal.
Right.
So maybe that's happened.
I've shown up at the client's office thinking the meeting wasn't virtual. So I just gone there early in the morning and I'm like, and then I realized that, oh shit, there's a Zoom link. So, like,
So you attended that meeting from the client's place.
I sat outside there, took the Zoom.
So they did bring you in also?
No. So it was like we were coordinating 3 people. So I sat in his office, but he was separate, I was separate in the same office. And third person.
This is a good one, Manthan.
I can't recollect.
So you have not done any mistakes in your life.
I would have obviously. I don't recollect at this point in time. On none that as major as that actually.
So that's what I'm not asking a major one. I'm asking the silliest
I
one.
can't recollect. Boss. I cannot recollect away.
Email error
also, I think.
Trivial, yeah. Too trivial. It won't be funny.
Makes sense. Cool. And do you guys get enough time to spend with your spouses or girlfriends?
Non-existent.
So I think
Not applicable.
So I think are you married, by the way?
Yeah, I'm
you are
married.
married.
I got married last year. Yeah.
Okay. And Darren?
No.
Got it. Yeah. So how difficult does it become for you to, after getting into investment banking, how do you spend time and all?
The best part is my wife is an investment banker too.
I was just gonna ask, is she a banker or not?
तो
my God.
वो समझाना ही नहीं पड़ता है. So
Best.
that's the best part, right? Like some weekends she's very busy, some weekends I am busy. So that's the best part. But to be very honest, like once that transition happens, then it will play out for you guys also that you're able to plan your days. So I'm able to have more control over my time. So if I have to really take out time for important personal me time sort of things, I'm able to work around it and plan because I am now dealing directly with the client. I've built that amount of trust. So they're also okay. Nobody is, breathing down your neck in that sense. So it's up to you to be able to do that. So that's what I was referring to, that how you manage yourself and what you value your time as is something which will decide whether you want to take out that time for your family. And I am somebody who's a firm believer of having a personal life. And I enjoy theatre, I do a lot of these things, so I want to take out that time and yet do the best I can. Yeah.
Sure.
Got it. What about you guys? I think Darren, you're the one.
I think it's I think it's really deal specific, right? So to be honest, when there's deal flow, when you're in an execution stage and you can't do anything, there are days where you just go home super late at night and you just want to sleep. That it happens.
No, I think the typical working hours, I think it's quite common in this industry. Like minimum has to be 12 hours every day, and it can go as long as 18, 20 hours.
There's no set hours.
Right?
In the deal phase, non-deal phase, you can create boundaries. Okay, it's not required.
Yeah. Exactly.
That's when you can do a lot of stuff.
I think you mentioned, right, like 10 a.m. to 5 a.m. I mean, that's just
crazy.
I mean, it's
crazy.
insane. 10 a.m. to 5 a.m. Like for how many days did you work for 10 a.m. to 5 a.m.?
About 8-9 days on the trot. Like
my God,
Then I passed out. Like at that time, But that was, I mean, I haven't had too much of that, to be honest. That way, domestic banks are not as nuts.
Not as grilling
as not.
But
Bulge
still, I
bracket.
think it's what 10 a.m. to 5 a.m. 19 hours, 19 hours. So 19 hours every day for 5 days. My God, I sleep for 9 hours every day here. I don't. I mean, I'm just figuring out.
Time to start a
But-
podcast.
No, I mean, this is my side hobby, guys. This is not my full-time gig, but yeah. But yeah, I think that's it from my side. Maybe one last thing, if you want people who are watching this who want to get into investment banking, what is one last advice you would want to give all of them? All the aspiring investment bankers, just one simple advice, what you will give them?
So, you know, I would like to just say that people end up hyping up that it's so complicated, financial modeling is this stuff, that much, all of that. I think people should realize that it's not rocket science. What we do is not as difficult as as it appears. Anyone can excel. So have that belief, have that faith, and have the right attitude, and you'll be able to make a mark. Yeah.
Yeah, that's a good one.
Yeah, just stay curious, guys. Like, I think that makes all the difference. I think, like, when you stay on with it, like, it's all you need.
I think it's very important to take ownership of what you're doing. I think because we want to grow into investment banking. If you are not a responsible person, I think you will not make it to the let's forget top level, even mid level.
Yeah,
Sure.
So I think it's a very high ownership role.
Makes sense.
I think people should start learning that right from the day one. You should take ownership of whatever you are doing.
Yeah. I think one thing which I also feel is that ownership is something which is almost required in every role now. Like even in, let's say, P, VC, or even in a startup, right? Like the more ownership you take, the more driven you are, the more initiatives you take, the better your chances are of growing as a person as well. Because in an ownership case, like you are an entrepreneur and not an employee working for someone is what I feel. So ownership part is, I think, although it might be more relevant for an IB, but I feel it's equally important even for, let's say, a startup role, or let's say a PVC role or consulting role anywhere in your career. But yeah, that's an underrated piece of advice as well. Cool, guys. Thank you so much for doing this. I hope you had good fun, but thanks a lot. I think I gained a lot of insights from this podcast as well. But thank you so much, guys, for doing this. I hope I could do justice to your time. I know the opportunity cost for you guys is too high, spending 2 hours. So although I don't know exactly in monetary terms, but I'm sure it's going to be super high. Thanks for doing this, and hope you also enjoyed and had a good time here.
No, we had a very good time. Thank you for having us.
Thank you.
so much. for
Thank you
having
so
us.
much.
I hope your listeners and your viewers enjoy listening to us.
Yeah, definitely they're going to enjoy. And guys, if there's anyone who wants to reach out to them and know more about investment banking, please feel free to. I'll list their LinkedIn handles as well. You can feel free to connect with them. I hope you guys would accept connection request and
Sure.
reply.
Absolutely.
Absolutely.
Happy to.
Yeah. Cool. Perfect. Thanks, everyone.
Thank you.